Good evening. Good evening, members, and today's speaker, Venkata Prasad. I welcome you all for today's virtual CPE program on GST issues and challenges for real estate sector. Members, still there is a lot of confusion among the trade or professionals whether GST has to pay or not in case of joint development agreements by the landowner. The three important points are: when who has to pay GST, who has to pay GST, how much we have to pay. These are the three important issues today, and also it is my privilege to introduce today's speaker, CA Venkata Prasad, qualified as chartered accountant and completed his Bachelor of Law from Usmania University. He appears before Customs, Excise and Service Tax Appellate Tribunal and various tax authorities. He is a faculty at ICAI, NACIN, Training Wing of Central GST, NI, MSME, and has given lectures at various other trade and professional firms. He is a member and active participant of GST Study Circle at ICAI Hyderabad branch. He is an active contributor of articles in ICAI Hyderabad monthly newsletter, GST Law Times, Tax Guru, TMI, CA Club India, and other professional forums. He is part of various books written on service tax and GST. In spite of this, he belongs to my native place, Guntur. It gives me it gives me pleasure to introduce CA Venkata Prasad to the members. Please kindly have a patient hearing. He is an young and energetic member, so it will continue for a period of 3 hours maximum, or maybe you ask the queries in the last. And over to Venkata Prasad garu.
Thank you, sir. Thank you, Subbara Garu, for your nice and brief introduction. I welcome all the participants for the today webinar, and I would begin my presentation. Hope my screen is visible to everyone.
Yes, sir.
Subbara is visible,
yes,
no?
yes, sir. Yes.
Yes. Yeah. Yeah. Today topic, as all of you know, is that the key issues of GST in real estate industry, including JDA. So I will be focusing more of industry based specific. If any queries relating to my presentation, you can put it in the question and answers box. And this is the advantage of online webinars. Instead of we keep remembering our queries at the end and asking, we can just put it in the question and answers, and we can take it in the end. And any other any other point which was not covered in my presentation, you are welcome to raise your query, and I will try to answer to whatever extent I can. And this is the broad coverage I'm going to cover in the next 3-hour session. So first I try to give what is the GST overview of real estate sector, and how the GST is being levied and what are the rates and all. Then there was all of you know, there is a scheme from 2019 where there is a complete shift of the complaints and all. The brief highlights of the scheme I would touch upon. Then I get into the main topic of the today presentation, that is various practical and legal issues in the GST complaints for real estate sector, which are further divided into various parts like transitions, or the taxability, or the valuation, or input credit, and other things. And followed by the common and very complicated matter in the real estate sector is the JDA, the liability on the JDA arrangements. I try to cover separately in the end. So whatever the discussion on the JDA, I have specific slides at the end. I will cover it in the I will cover it in the end. Followed by I'll take the question and answers. This is the broad coverage of the session. The overview of the real estate is like this. Any transaction in real estate can be divided into, it is comprised of 3 parts or 3 components. For example, if the builder enters into sale of flat contract, that means if he agrees to sell a flat, that flat construction will involve 3 components. One is that goods or materials. That means that involves cement, steel, sand and etc. And also it also involves the labor or services. That means it involves the labor component of architecture designs or engineers or the labor for the construction work. And also of course this aggregation of goods and labor will be done on a land. That means development will be done in the on the land. That means any flat any real estate transaction will comprise of these three components. And because of this combination of three components has actually complicated the or the caused the lot of complexities in the tax compliance, particularly indirect tax compliance for the real estate. Because if you look at before GST, goods or materials are liable for separate tax, that is sales tax or VAT. Similarly, services or labor is liable for separate tax, that is indirect tax, that is service tax. Similarly, land is separately liable for different tax, that is stamp duty. So all three components are liable for different taxes, and and different authorities. That is, materials sale of materials will be administered and controlled by the sales tax team, whereas services it is service tax, and land is stamp duty revenue department. So every department is different, and because of this different taxation on the same transaction, three different taxes on the same transaction. So every authority or every act is trying to maximize their revenue, and at the same time they also would like to avoid the revenue leakage. Because at that time, in 1990s, there is no service tax, so most of them are trying to say that it is service, and thereby that they can save the sales tax. Similarly, when service tax was introduced, there are some composition under VAT, and which is less than the service tax. So likewise, there is revenue leakage, which taxpayer try to put it. Above all, there is a lot of litigation in the indirect tax for this real estate, right from the levy of sales tax, because the matter has gone to Supreme Court, and Supreme Court in the 1980s also they are told the because of the complex the separate unique nature of the real estate transaction, the sales tax cannot be levied. Similarly, services also, the law was not sufficiently framed to tax the services under real estate. So likewise, there is a lot of litigation and various aspects, right from the levy as well as evaluation and etc., which we are going to see in the coming presentation. So because of this, government also made a lot of amendments, right from the sales tax constitutional amendment to get the power to tax the this real estate transaction, and also service tax. There was retrospective amendments. Likewise, there are a lot of amendments also. So that's the reason you also see a lot of changes or dynamics in the indirect tax provisions for real estate prior to GST. So after GST, there was some understanding that at least to some extent it will come down. But what extent it will come down, we'll see in the coming slides. And the main one of the reason is this complex nature of the transaction. The other also nature of it, why there will be a lot of practical issues, or also the litigation, is that this of course this with the introduction of now RERA and all, the compliance level is becoming increasing. Otherwise, earlier it is most of the sector is unorganized, and a lot of systemless players are used in the market. Thereby, they used to put it in a lot of non-compliances, which is led to a lot of litigation. So, and also of course, GDP contribution wise is also very important. It's critical sector for the company economy. I'm sure each of you would have noticed in the lockdown time how many people have lost their jobs, or the revenues, because of real estate transactions not being picked up. Of course, that was get compensated later. That is different story. But that is how this it is real estate sector is also very critical for the company GDP, and whatever the taxes that the government is going to impose, or the disputes they are going to create, will have an equal impact on the growth of the country as well as economy. So that is so far the industry overview. And as far as GST overview is concerned, so of course, as all of you know, under GST, all supplies are covered, and they are given exclusion for the land sale or building sale. That means if you sell the land as is to the customers, that is not liable for GST, and also same question with the building, because there is no supply of service there or supply of goods there, because it's already constructed. And after GST also, land and building taxes were already there in the constitution, and state government is still continued to levy stamp duty on that land sales or as well as the building sales. That's the reason that is specifically excluded from the schedule of GST by in supply definition. Thereby, there is no GST on the land sale and building. But you must be wondering why, if these land and buildings are excluded from the supply definition, why they are taxing. So the reason for this is that if you sell the already constructed building or the land as is, there is no service. If it is if there is agreement to do a specific construction services or some contract, then it is not mere sale of the land. There is a difference between agreement to construct and sell a building, and there is a difference between simply selling the land building. So that is where the difference the government is trying to make, and saying that if you before completion of the construction, if you sell the uh, uh, building or the part thereof to the customer, it will be service and you have to pay GST on it. That is what the schedule 2 classification entries were made. uh, Now the rate also I'll explain. So before this new scheme from 1st April 2019, the standard rate is 18%. However, there is a one-third deduction for the land value. That means effective rate of GST prior to 1st April 2019 is 12%, and the taxpayers are going to get full input credit, and thereby their net effective rate may, depending on the quantum of input credit, it may be 4% or 5%, or sometimes it may be 6 or 7% also. So because of this, though the net effective rate in the hands of builders is less than is almost on average it is 6% or 5% or 4%. But what builders are doing in the customers is they are trying to give a picture of GST being a 12%, and most of them are not passing the benefit of input tax credit to the buyers. And the retail customers who buys the flat from the builders are getting a wrong notion that they are paying GST at 12%, which is huge on the home buyers, and home being one of the essential element of the life of everybody. So they are paying, government is very unjust in collecting the GST at 12%, and that too prior to GST they are giving a picture of only 5 to 6%, whereas after GST it has become almost double. So that kind of wrong message has gone into the country, and government initially in the initial days tried to clarify that no, we have not increased any tax rates for the home buyers or the flat buyers. It is only once that inbuilt input rate is considered, that effective rate will come down to less than 5%. Thereby, in fact, we have given a benefit by way of GST. Though they are trying to give 2 3 press release government has given, and also they has warned the builders to pass on the input credit to the customers. But I think somehow government also got a feedback that that input credit benefit passing is not really happening, and thereby customers are feeling that the 12% 12% GST on the real estate sector is too much, and it is costing too much to the buy a flat. So for this socio and political reasons, what government has come with is that they come with the option saying that this is what the new scheme that has come with from 1st April 2019. They told that for 5% would be the composition rate, and there are some conditions. I'll brief it in the coming slides. So the background of bringing this composition scheme is that mainly because the builders are not passing the input rate to the customers, and by virtue of this, there is a some wrong notion that GST rate is 12% on the flats. So that is giving a wrong message, and it is costing the homes very high, and builders are getting profited. That is because of, in this background, the government has come with a new scheme, and they what are the new scheme, what does it say, and all that I'll touch it here. So what they are saying is they are classified into 2 parts. One is that affordable housing and non-affordable housing. They told that if it is affordable housing, the rate is 1%, and there is no input credit. And if it is non-affordable housing, it is rate is 5%, there is no input credit. What is affordable housing, and what is that if the area, if it is a metro area, then there should be area should be less than 60 square meters, and the sale price should be less than the 45 lakhs. If two conditions are fulfilled, then only it will be considered as affordable housing. Accordingly, that will get to attract the GST at 1%. Similarly, if it is non-metros, it is 90 square meter and the sale price remains same. That means all the condition has to be satisfied to consider it as a affordable housing. Once it is considered, then rate would be 1% and there is no input credit. If it is non-affordable, then rate would be 5%. What is non-affordable, which is not affordable. So that is just like a negative dish. What is not affordable, it is become non-affordable and the rate will be 5%. However, there is some option given for the ongoing projects before 1st April 2019 also this concept of affordable housing was there. At that time, the affordability was not linked with the area and the sale price. They were simply told whoever buyers whoever are getting the subsidies under the Pradhan Mantri Awas Yojana scheme, there will be considered affordable housing, and they have a concession rate of 8% after land deduction. So that also they have considered as affordable, and they have given this benefit of 1%. And another classification for this 5% is that there would be some combination of residential as well as commercial. In that case, what the scheme says is that if commercial area in this entire project is less than the 15% of the total carpet area of the project, then it will be that commercial apartments also will get the benefit of 5%, and accordingly that 5% can be paid on the sale of that commercial area. So suppose if you see any gated community, there would be suppose there are some 30 flats, and the ground floor or some initial floors will be given to the shops like supermarket or the medicines, medical store, likewise the ATM and all that they'll give. So there will be, every gated community will have some portion for the commercial operations. So that is less than 15% of the total carpet area, that also gets the 5%. Otherwise, if it exceeds the 15%, then that commercial area will be liable at different rate, and not for 5%. And the conditions for the new scheme is that no ITC will be given. Everything has to be total tax has to be paid in cash, and whatever the ongoing projects are there is a detailed mechanism was given in Annexure 1 and Annexure 2, where whatever the ITC availed has to be quantified as per the Annexure 1 and Annexure 2, and they are told that if it is excess availed, you have to reverse. If it is less availed, you are allowed to take that whatever the short availed. The logic of Annexure 1 and Annexure 2 is that they simply says is that suppose your project area, so if it, because it is ongoing, this calculation is only for ongoing as on 1st April 2019, not for all projects. So for this ongoing projects as on 1st April 2019, the logic of Annexure 1 and Annexure 2 is that to that extent of area which are already got taxed prior to 1st April 2019, government says you are allowed to take credit. To that extent of area which is not which is getting taxed after 1st April 2019 under a new scheme of 5% or 1%, then ITC should not be given. That is the logic they were trying to put it in that Annex 1 and Annex 2. But that mathematical calculation is a very big exercise which one has to do. I'm sure by this time everybody would have done that. Whoever has migrated from 12% rate to 5% on the ongoing projects in the year 2019. So that one exercise is there. That is one of the condition for ongoing projects. The for ongoing as well as new projects, another important condition to be followed or to be complied for this 1% or 5% scheme is that 80% of the procurements, be it inputs or input services, shall be purchased from the registered tax persons under the GST. That means why this condition was kept is that the moment I say government says that you are not allowed to take input credit, they always every economy is like that. Well, so there's no input credit, they don't bother about the they try to get it without taxes, and there is going to increase of parallel economy, and black money may get impacted, and most of the suppliers to this real estate try to avoid GST by various means. So to avoid all those, at the same time to ensure that the compliance is made, what condition they have put in this scheme is that 80% of procurement shall be made from the registered persons under GST. So that rate may be different. That rate may be composition. That rate may be a normal rate, or that rate may be different on the customers, different on the commodities. But that total procurement of 80% should be from registered persons. Then no question comes is, what if I don't procure 80%, I will procure only 75%? In that case, what they say is that whatever the 5% is there, the 5% has to be paid under reverse charge by the builder. That means whatever shortfall of this reached procurement, that has to be paid by the builder under reverse charge at applicable rate. If it is a capital goods or cement, if it is a other procurement, they say standard rate is 18%. So they don't get into the classification, because there is that total purchases will be combination of many things. Suppose sand would be 5%, cement would be different rate, and the aggregates will be different rate. So that's the reason they say whatever shortfall of 80% procurement will be liable at under reverse charge in the hands of builder, and he has to pay GST at 18%, and which anyway will become cost, because it will not be eligible for the credit. And whatever the TDR and JDR, and these are the exclusions for while computing the this registered procurements. And as far as cement and capital goods, that 80% is not 80%, it is 100% you have to procure from the registered persons. So whatever the shortfall of cement and capital goods to the extent of 100%, that has to be paid by the builder, and again under reverse charge. The rate would be cement, if it is cement, that respect to GST rate on the cement. If it is capital goods, again that respect to machinery. For example, if it is some JCB it was purchased, or some machinery was purchased, that whatever the rate applicable on the capital goods will be have to be paid under reverse charge by the builder. And as far as cement, it is at least this 80% or 100% procurement from the registered person is on an annual basis. For cements, there is another exception, is that it should be on monthly basis. That means because it's 100%, every month we have to see whether we have procured from registered person or not, and whatever shortfall is there, we have to pay in the next month itself. Whereas in case of regular purchases like sand or any labor supply or any contracts, then all those cases we have option of seeing at the end of the financial year, and we have time up to June. Whereas in case of cement, it is on a monthly basis only we have to see, and whatever shortfall is there in the procurement from the registered persons, then that has to be paid on the reverse charge on the immediate next month. And another important condition of this scheme is that we have to maintain a project-wide records, and that records, that means project-wide records, what projects we have separately, records has to be maintained in terms of the how much expenses was incurred in this month, and how much ITC was available, which is not available because of the scheme condition. Because if you don't get ITC because of this condition, they say is that you have to disclose how much ITC was not available in this GST 3B, we have to disclose it. The another condition is that this is again for the ongoing only, not for regular. Because there is an option is given for the ongoing projects as on 1st April 2019. They says is that if at all, if you would like to continue under the old scheme, that means 12% with full credit, then the declaration in the Annex 4 has to be filed before 20th May 2019. Otherwise, if it is not filed by that time, the notification says it is deemed that you have shifted to new scheme, and you have to pay GST at 5% without any input credit, and whatever input credit so far availed up to 1st April 2019 has to be restricted as per that Annex 1 and Annex 2, what I shown in my in this bulletin number 2. So these are the another condition. And as I was saying, if commercial area also is less than 15% of total area, then that commercial area also will get benefit of this rate. Otherwise, the commercial area will be taxed at normal rate of 12%. Of course, full credit will be given to the extent of commercial area. And this is just comparison of the old scheme and new scheme. I think it's just affordable how it is rate under new scheme and old scheme, and what about the ITC. So this if you see this earlier affordable housing, it is 8%. Now it has come to 1%. Of course, that corresponding input credit has gone. Similarly, non-affordable also earlier 12% with full credit, and no input credit now 5%. Commercial portion, if it is less than 15% in total area, earlier it is 12% with full credit, now it is 5% without credit. Commercial area, earlier it is there is no change for the commercial portion, commercial projects, that still that 12% is there effective rate, and full credit will be given. In combination of the real estate, residential as well as commercial project, that means RREP, there then in that case, then that if it is more than 15%, then that commercial area will be taxed at 12% and full credit will be given to that extent. This just comparison. And the reverse charge also, I think, as I was saying, whatever the shortfall of the 80% purchase or procurements from the registered persons, that has to be paid and reverse charge, and the reverse charge rate is 18%. If it is cement and capital goods, that as applicable rate would be there. So these are so far I have given the overview of the scheme, and because it is already running scheme, I have not gone into the integrities of the scheme line by line, but I just given the overview. And now I'll move on to the issues, practical issues or the legal issues, one by one. First is that there is a first important issue that everybody most of the cases is coming now, at least now department has started and they are investigating or they're doing audit. So the first question is for the ongoing projects as on 1st April 2019. If you actually see this new scheme, it is not actually benefiting the taxpayers most of the cases, because once input credit is not given and net total liability has to be paid in 5%. So most of the cases, if input is credit is considered, many times it comes down to 4% or 3% sometimes. Even if it is cash liability is there, that would be there only in the end of the project, not beginning, because most of the procurements of the real estate will be there in the beginning itself, either the cement or steel or the contractor payments. Because whereas the total most of the payments will come, majority of the payments from the customers will come at the end of the project. So thereby, even if there is a cash liability also for the builder, that will be there at the end of the project. Whereas in case of new scheme, because everything has to be paid in cash, this is not beneficial in many cases. Though it was scheme has come, but it is most of the cases it is not beneficial. So thereby, the most generally majority of the, I think I'm not sure about the majority, at least many of the builders who made this comparison of the old scheme and new scheme for the ongoing projects, they made this comparison, and wherever they felt that that the old scheme is itself is beneficial and it is giving a lesser tax burden on the customers as well as the builder, what they have done is as per the law, as per the notification, they have to give a declaration in the annexure 4 before on or before 20th May 2019, saying that the builder is would like to continue under the old scheme and he would like to pay GST at 12%, and you will be availing the full input tax rate. That is the mandate of the notification. Now the issue is that not many, some of the people have not filed this declaration knowingly or unknowingly. So some people would have felt it is not required, it is not mandated, it's just intimation. Some people would have felt they are not aware also. Likewise, there are some mistakes in not lapses in not submitting this declaration. Now, but at the same time, they did not migrate into the new scheme, but they continued the old scheme and they continue to take the credit. Now, only those cases, if it is they migrated into new scheme, there is no problem. If they are not migrated into new scheme and at the same time they are not given declaration, then now the question comes is whether they can be saved now is the question. To this, of course, notification is very clear. Notification clearly says that if declaration is not filed on or before 20th May 2019, it is deemed that you have gone into you are migrated to new scheme. Thereby, strictly going by notification, yes, you are you are at default and you should not take the credit, and whatever credit you have taken, you have to reverse it. Of course, here one point what we have to look at is, if the after considering the input credit, whatever the tax liability was paid in cash, if it is more than 5%, because there is no extra liability, we can showcase that net cash payment is on overall the project is more than 5%. Thereby, even if I migrate into 5%, I have not short paid any liability, that we can show it. Or else suppose the net cash liability on overall it is 4%, or in a particular year it is 4%, but what I have to pay under new scheme is 5%. That means there is only short payment is only to the extent of 1%. It cannot be that entire 5% has to be paid again and I have to reverse the credit. That cannot be there. That to that extent we can save that safeguard that liability. Of course, another argument can be also be made saying that declaration is only procedure lapse. The fact that I have filed GST returns showing that I have paid GST at 12% on the total advances, which is also on or before the same date of 20th May 2019, shows that GSR1 would have been filed by that time, and this GS3B also would have been filed on or before that 20th May 2019. So that is also as good as intimation and to the department. Just because this is done in a different form, so it cannot be said that I have not informed the department. So that argument also can be taken, and also the argument that it is only procedure lapse and that cannot take away the substantial rights. Likewise, we can take some arguments, but this is going to be issue that is going to come in future wherever they miss to give a declaration and continued under the old scheme is one issue. And the next issue is that suppose in JDA cases there is developer has shifted has not shifted for new scheme and the ongoing projects, whether the landowner has to opt the same scheme. That means if developer has not migrated to the new scheme but is still on the old scheme for the ongoing projects, whether landowner is obliged to go in the same option or different option. As per the notification, there is no restriction. Even the FAQ given by the government also says it is your choice either to go with the old scheme or new scheme, but it is recommended that both the parties are under the one scheme, either the old or new scheme. And of course, wherever there is a price increase, because once you opt for a 5%, or if you are migrated for 5%, there may be some price increase. So that can also be basis to say that the rate is justifiable, and prior to this 5% scheme, so what is agreed is less than the 5%. And there is one clause that what I was saying is for ongoing projects, if it is migrated to the new scheme because of either not filing declaration or would like because taxpayer chooses to go under the new scheme, there is annexure 1 and annexure 2 calculation has to be taken, where the one of the clause is that whatever the logic I have told, saying that to the extent of area which was offered to GST prior to 1st April 2019, the credit will be allowed, and whatever the area was not offered for GST after 1st April 2019, that means because there you don't get credit, so that has to be restricted. That is the logic that Annex 1 and Annex 2 was drafted. So going by that calculation, suppose I have taken a less ITC than what I should have been taken. So that is in that case, what notification says, suppose going by that Annex 1 and Annex 2, I am eligible to get ITC of take ITC of 1 crore, but that actually I have taken so far up to 1st April 2019 is only 80 lakhs. Now 20 lakhs credit I am eligible to take credit. Now the question comes is, under the once I migrated to 5% scheme for the ongoing projects, now the question comes is that 20 lakhs under the new scheme, the condition is that I cannot use the credit, I have to pay everything in cash. Now, whatever this excess ITC which I am getting because of the Annex 1 and Annex 2 calculation, how that I can utilize it? If the notifications I can't pay it in cash, credit after 1st April 2019, what I do with that excess ITC? The answer remains is that yes, of course, you are not eligible to utilize that excess ITC for the payments of GST for the 1st April 2019 onwards. But you can, if there is another liability, like if you have a commercial project in the same company, or you have some building rents, or you have some other maintenance charges, there you can use it for that credit. So otherwise it will be become a useless. So far we have discussed the practical issues in the transition to new scheme. Now we will discuss the what are the practical issues in the taxability. Now if you see the beginning slides, the one of the criteria is that for construction they says is that if the customer the booking is happened or any advance is received before receipt of the completion certificate, then it will become a service and GST has to be paid. Suppose if I don't get any amount till the completion certificate or first occupation, whichever is earlier, then there is no GST. It goes out of GST. That's the reason it says Schedule 2 entry says construction of complex or building civil structure or part thereof intended for sale to a buyer except entire consideration has been received after issuance of completion certificate. Now, issue what I would like to discuss here is, if you see this entry, if the entire consideration has come after the completion certificate date, then there is no GST on it, and it goes out of GST. Now the point is, what is completion certificate? So in general practice is that they say, is it referred to the occupancy certificate? Is it this, both our completion certificate and occupancy certificates are the same? If you see either schedule to entry, what I have just shown you, or else notifications referring to the tax rates for GST on this real estate, or other notifications, they all along they were only using the completion certificate. They are not nowhere referring to occupancy certificate. Now the question is it both the terms are same or it's different? If you look at the legal meanings of both, and also the definition given under RERA also, they both are different. Completion certificate is different, occupancy certificate is different. Completion certificate is only certificate that construction of building is completed as per the approved plan, whereas occupancy certificate is that building is fit for occupancy and you can come and occupy the property building. So that means completion certificate is different from the occupancy certificate in terms of the nature of its certificate itself, and also this at what point completion certificate will be given will be different, and occupancy certificate will be given at different. By nature, completion certificate will come first, followed by occupancy certificate. That's the reason while applying occupancy certificate to the competent authority also, the builder has to submit a completion certificate from the architect and saying that it has been completed as per the approved plan. Even RERA also recognize the difference in the both completion certificate and occupancy certificate. Now you may get, you may wondering why I am discussing all this difference. The difference is important in terms of the getting out of from GST net. The moment if I say completion certificate is only the criteria to decide whether the particular flat is liable for GST or not, then the GST liability will be not be the completion certificate will be only in our hands. What the builder can do is he can complete the construction, whatever the time limit there, and you can simply get the complete certificate from the architecture or the civil engineer, and that will be sufficient to say that whatever the bookings made after the completion certificate, there is no GST on it, and accordingly I not pay GST. This can be done, so thereby they can come early out of GST net, and GST burden can be reduced. However, the other consequence of this stand is that thereby there would be early if it is commercial projects, because once you come out of early out of GST net, the proportionate ITC has to be reversed, because suppose there is a 1 lakh square feet area in the project, out of 1 lakh 70,000 was sold before completion certificate, and 30,000 was not sold at as on the date of completion certificate. The moment I say completion certificate date is why I not pay GST from that date, the 30% which was unsold area, so of course I don't pay any GST when I sell it, but the consequence would be that the proportionate ITC to the 30%, I have to reverse it under Rule 42. That benefits that comparison we have to make it while taking this stand. So this is one important point what we have to keep in mind while taking this stand. The other important point is also that if it is okay, this so far is fine for the commercial. And what about the residential? Residential, of course, you are under 5%. There is no question of input reversal, but there are other consequences what we have to keep in mind. Of course, there will be a relief from the GST liability, and we can also market saying that there is no GST on my flats. But the point is that there will be a RCM liability on the development rights to the extent of unsold area. Of course, I will be briefing, elaborating in my further slides, but there would be to that extent there would be RCM liability may get increased, but that may not be that much of output liability of the customer. So there again it will be beneficial, and even the landowner share liability also gets preponed, but again that again is not going to have impact much. So both the second and third point I will be discussing in the coming slides when I discuss about JDA. But some substance of this discussion is that if completion certificate is taken as can be taken as a basis to say that from that date of completion certificate from the architect or civil engineer is sufficient to say that GST is not liable from that date. I need not wait for the occupancy certificate. The difficulty is that occupancy certificate many times takes huge time. There are some projects I've seen, they have not even got the occupancy certificates even till date, but construction was completed 3-4 years back. There are some cases where years and years they waited, and likewise, so to an extent, there is a lot of savings would be there. But the moment we take this benefit of this completion certificate, not as an occupancy certificate, so this is one issue. I is I would like to cover. I covered it. Now the another important point is that if you see that again, that the exit from the triggering point of exit from GH liability for the construction is that either the completion certificate or the first occupation, whichever is earlier. Now this first occupation theory is very new to the new in the GST, because before GST that completion certificate theory was there, but after GST, before GST that first occupation theory was not there. Now how do one prove that there is a first occupation in the project? Thereby from that day I stop and not pay GST on it. So practically what you can do is, if it is occupied, they must have got electrical connection, FCT connection and water connection and all. Those bills can be shown it as a proof saying that they have been occupying the property, and say that there is a first occupation in the project and GST need not be paid. Now this another practical issue that can be that is there is that there is one settled legal principle in this construction and work contract, is that there will be a contract, there it is a self-service till for the whatever the works so far done till the customer coming in. Suppose, to give an example, the project is started in the January 2020, and I kept on going constructing the properties. However, and I'm also getting the bookings. Suppose there are 100 flats. Out of 100 flats, some 60 flats were booked, 20 flats every year. 2021 20 flats were booked, another 2021 another 20 flats were booked. So far 40 flats were booked, and 60 flats were lying in stock. In suppose by April 2022, my percentage of completion of the construction was 80%. Only 20% is left over, and I have a, so 20% is completed, is yet to be completed. Now by this legal principle, what we can say is GST is liable only on the 20% of the value, not on the total 100%. To give an example, suppose if customer comes in May 2022 and he booked a flat for 1 crore, and we can take an argument saying that by the time customer coming in, 80% of construction was completed. Thereby, that 80% of the work was done. It will be a self-service, and there is no GST on the self-service, and GST is liable only on the 20% of the contract value, that is 20 lakhs, and GST I'll pay only on 20 lakhs. Of course, there I'll take again 1/3 land deduction to pay only on the 30 lakhs. So likewise, we can take this argument, and in fact, this is not a new point. It is a very old point, and it is there in the VAT and service tax also, and the Supreme Court decision was also there. And this judgment was also recently, discussed and re-emphasized by the Gujarat High Court in one of the latest judgment. So this is again where planning can be done. This is very crucial and very helpful in case of the residential project, because anyway customer is builder is not going to get credit. So once we are able to save the GST on 70% or 80% of so far constructed, we can take the benefit. However, one important point to be noted is that whenever we are taking this percentage of construction completion, so we have to have a supporting documents. However, now that RERA is into compliance, whatever the RERA compliance what we made every quarterly, I think we have to file a return showing the how much of the percentage of construction was completed, and we have to give the certificates from the architect as well as chartered accountant. That mapping can be done, and that can be taken as a basis to say that this is the percentage of completion done by the time customer comes in and booking a flat. Thereby GST is only liable on the balance portion, not on the entire portion. So this is another area where we can save a lot of GST for the builder, and with the supporting legal provisions. And there is also another matter pending, is that suppose what many times what government does is they'll have some open lands. They say they'll give it to some private party or any party. They says that I'll give a land for 90 years or 60 years, and whatever the development of that land, you develop it, and you use the operate that property. Suppose they says that you develop some commercial shopping mall and you enjoy it for 60 years or 90 years. After 60 years or 90 years, you surrender back to the government. That means that property will be surrendered back to the government. Of course, any property after 60 years or 90 years will not become that much useful and will become very old and sometimes may get destructed also. So thereby, so now in this background, there was one argument, and is that the long term lease for the 60 years or 90 years is nothing less than of land sale. Thereby, it is as good as land sale of land only. And once it is a sale of land, the consequence is that it is not liable for GST. That is the argument that is coming in this background. However, when it was challenged in the initial days of GST, the Bombay High Court has turned down this argument and told that GST is liable, long term is lease is different, and sale of land is different. And they have referred the provisions of Schedule 2 of the CGST Act, where they told that lease or license of the land is also service, and so thereby it is liable for GST. However, the provisions on which Bombay High Court has given a decision now is amended by the government, and where they say Schedule 2 cannot be interpreted to attract the liability, it is only for classification. So I think the Bombay Court decision now is pending before Supreme Court. We may have to see how Supreme Court is going to react, not only for the grounds what they have, and also that the amendment what they made in the GST provisions. This is another issue what is there in the real estate. Another issue relating to taxability is that when the builder sells the flats or the villas to the customer, he will not only collect the value of the flat or the unit, he'll also collect various other charges, like he'll collect preferential location charges. The preferential location charge is nothing but if it is a east facing charge, they'll collect some extra charge. Or if the high rise building, they say like if you take high rise floor, that means if you take some 20th floor, 30th floor, so they'll take some extra consideration like 100 rupees per square feet, like that. Similarly, some pool view, some kind of some preference location would be there. Similarly, some customers will buy a extra car parking. So and also they'll also collect separate charges for the D set and gas connection. Similarly, clubhouse charges and all that. Now the question is whether this first, what is the rate applicable for this various other charges collected by the builder? The answer is that these various other charges collected by the builder are also liable at the same rate of the flat unit. Whatever the 5% or 1% what we are liable on the basic price of the flat, the same rate will be applicable for this charges also. This issue was already raised in the service charge regime, where service charge department had tried to deny the abatement, saying that it is liable at full rate, no abatement is eligible. Then there are various tribunal judgment, which some of them I quoted in my presentation. They clearly told that this abatement of is eligible for this because it is a composite supply or composite transaction, bundle transaction, and whatever the rate applicable for the construction will be equally applicable for these various other charges collected by the builder. The one important point is that these charges cannot be collected without I doing a construction. I cannot collect only the preferential location charges without selling the property or constructing the property for the customer. Similarly, without constructing the property, I cannot sell a DG set or gas connection to the customer in that gated community or in that customers. So that is why they said that it is composite supply, and whatever the rate applicable for the sale of the construction of the building is equally applicable for these other charges also. However, as usual, there are some advanced rulings which can be ignored except for knowledge purpose. And the builder also collect the advanced maintenance charges. So now issue is whether the GST is liable on advanced maintenance charges. Answer is yes, it is not liable, because the advanced maintenance charges, there is a separate enactment in every state where they says is that every builder, whoever construct the building apartments, he has to open a separate account and he has to put that money in that particular bank account, and he has to transfer that amount to the society. So if any maintenance service was done by the builder before formation of society, to that extent GST has to be paid. Whereas whatever the maintenance was not done and this amount just collected and given to the association by the builder, to that extent GST need not be paid. It is legally we can take this stand. However, practically, instead of getting into dispute, most of the cases the builders are paying GST on this maintenance and taking the credit out whatever the maintenance charges, the expenses would be there. Similarly, corpus fund also. Corpus fund also is like a fund created which will again will be transferred to the society again. Cannot be used by the builder again. So this also we can say that it is not liable for GST, and there was judgment in service tax which can be used for GST also. And of course, stamp duties, legal and documentary charges, all this also we can say that it is not liable for GST because it is only collected on the actuals, and it is nothing but statutory payments. And of course, the documents are very key. So if any amount was charged and collected over and above the actuals, that to an extent that may have to be paid for GST, after for GST. And there is some cases what may happen is, so if a customer books a flat, what builder does is they'll have some scheme saying that we'll do some services free of cost. Suppose they say some festival offer is there, whoever books the flat or you villa house in this festival season, the kitchen interiors will be free. So likewise, there will be some offers. So all those cases we can say that because it is done as per the as part of construction, it is nothing. It's just a scheme that was introduced to encourage more business. So we can say that whatever the GST was paid on the sale value of the flat, that is sufficient, and there is no extra GST to be paid on that. Whatever the free services given in terms of the extra interior works done or car and all that. And the another practical question that always comes in the real estate is that there is a already customer has entered, agreement was entered with the customer, and initial they many states this practice is there. What they do is, suppose the total sale price agreed is 1 crore. So but the market value as per the state government for stamp duties, let's say, is only 70 lakhs. What they do is that 1 crore, because the moment they execute sale deed for 1 crore, the stamp duty has to be paid on the entire 1 crore. In many some states is 7% or 8% is there. So what they do is they'll bifurcate that 1 crore sale value into 70 lakhs is sale deed. They'll transfer the land and semi-constructed, and the 30 lakhs they'll execute a separate work order, and they say that it is construction agreement, and that will not be registered because if there is no stamp duty on it. So now the question is whether the 1% or 5% will apply on the 1 crore or only on the 70 lakhs. That means whatever 30 lakhs which is not separately registered as a construction agreement, whether that is liable at eligible for the 5% or 1% rate, or it is liable at 18% full rate. The answer is there is no that splitting is not required. The entire sale price is 1 crore, and it is only registration purpose that was bifurcated, but the obligation, the combined obligation with the customer is 1 crore is the sale price, and I have to do the entire construction of the flat, including the semi-finished as well as the extra work. Thereby, that 1% or 5% can be done, and there is no requirement to bifurcate that 70 lakhs, 30 lakhs for purpose of rate. This is fair enough, fine. This is one issue. The second issue is what will happen. Initially, they'll agree that 1 crore is the sale price, and whatever that agreement they do. Now, what happens? At the time of occupation, the customer says, "I would like to have some additional works in the flat." Suppose they say interiors, why don't you do interior works also by you? That builder sometimes they'll take it up and they'll do it. So in that case, whether that additional works done by the builder will be still liable at 5% or the 18% is the question. To that, what we can answer would be like this: if it is that arrangement of additional work is done as a part, as a addendum or amendment to that original agreement, then we can say that that is also liable for 5%. If it is separate work order was taken, then because it is separate obligation, independent obligation, we can say it is tough to say that it is liable at 5%. It will be a separate transaction and liable at 18%. So it all depends on how we enter into agreement with the customer for as far as the additional works is concerned. So far I have covered the issues in the taxability. Now I am moving on to the issues in the valuation. Yeah, now I'm moving into the issues related to valuation. One very important and this is latest development in this issue. So the background of the issue is this: the government says because land component is not liable for GST. At the same time, the rest of the transaction, that means, as I was saying in my beginning of the presentation, the flat construction contract consists of three components: material, that is cement and steel, as well as the labor work, and also the land. So first and second, before GST are liable for different three taxes. After GST, they are liable for two taxes, that is materials and labor liable for GST, and land is still out of GST and liable for stamp duty. So because the entire transaction value is not liable for GST, government has to come and say that whatever the non-GST portion of the transaction should be excluded and pay GST only on the rest of the amount. For example, if I give an example, the what government has told, 1.5 crore is the total sale price of the flat, and out of that 1.5 crore, because the land portion is also there in the 1.5 crore, the government told that I'll fix the land value as 1/3, and that value will be deducted. Balance 1 crore may you have to pay GST at whatever the rate applicable. Before 1st April 2019, it is 18%. After 1st April 2019, it's 7.5%. That's the reason all along, if you see any notifications, you'll only see the rate of either 18% or 7.5%. But in the everywhere you listen the hear that the rates are either 12% or the 5%. How the 12% or 5% has come is that is nothing but the 1/3 deduction of that land, and the net effective rate will be 12% or 5%. 7.5% into 70, 2/3 would be 5%. So this is what they have done. Now that is where the problem is. The problem is land value, they says across this notification is across uniform across India, and every state has made similar notification saying that 1/3 I'll give a deduction towards the land. But if you see, particularly example, if I have to give any example, the land value will not be same in across the India, across country. In metros, particularly metros, there will be a lot of variation. Forget about across country. In the same country, same city itself, there is a lot of variation. So I just take an example how this will be different. For example, if you take Kurnool, Hyderabad, and Bangalore, and New Delhi, and Mumbai, the land component vis-a-vis total sale price, if you see, it will be almost opposite. For example, in to type 2 city of Kurnool, it will be 25% or 30%, whereas in case of Mumbai or Delhi or Bangalore, it is more than so more than 2/3. So thereby, because by virtue of this, but the government says is only 1/3. They says, I know that the actual value is that more than 1/3, but they are only saying 1/3 will be given as land deduction. That is where the real problem. So indirectly, by virtue of this, what is happening is the land value also getting taxed under GST. So it is nothing but which is directly cannot be done, so indirectly cannot be done. That is the settled principle. What they say is what cannot be done directly cannot be done indirectly. That is the settled principle. So adopting this principle, if you look at here, directly they cannot tax the land component, but by virtue of fixing only one land value is only 1/3 in every transaction of real estate across India, across all cities, within the city also, they are indirectly taxing the land component, which is goes against this theory. So this gives an example how this is getting differences. For example, if you take example of Hyderabad, 1.5 crore is sale price. If you take actual value is 78 lakhs, and actual liability, if you take liability GST liability, if you give the deduction of actual land value, the GST would be only 5 lakhs, but government is collecting 7.5 lakhs. Straight away there is a excess collection of GST on 2 lakhs per unit of the apartment. So likewise, every city getting badly impacted. So this is where the government is making unjust collection of the tax, which constitutionally as well as lawfully is they are not entitled to collect. That is what being challenged in Gujarat High Court. What Gujarat High Court told, when there is a actual value is ascertainable from the agreements as well as the various records, you cannot say that 1/3 is only the land I can give deduction and rest 2/3 will be taxed. So they told that actual value of the land should be given as a deduction, and wherever it is available and it is justifiable from the records, and the deemed deduction of 1/3 or notional deduction of 1/3 deduction is only the optional, not as a mandatory. That is what the gist of this High Court decision. And once that High Court decision is implemented, every flat buyer or unit buyer is going to save a lot of GST on this by virtue of this method, and there's going to be a lot of price reduction also by virtue of this. This is the example I just shown you to showcase how this is getting impacted. The last column G, if you look at Bangalore, this it is almost 3.75 lakh. Delhi and Mumbai is too high. So 5 lakhs per unit. 1.5 crore is very average price, at least in metro cities, right? In the current days. So this is this. So if you look at this, by virtue of this, government has collected a lot of tax. For example, if project is 100 units, so if you multiply that extra tax per unit for 100 units, so almost 4 crores, 5 crores excess tax was paid by the builders. This is per customer, and if you multiply the units, if it is 200 units, of course gets doubled. So there is a lot of extra tax has been collected by government by virtue of this wrong method of fixing the land value as one third irrespective of the location and actual land value. So that is what Gujarat High Court has given a relief, and they told that they have also read down that notification saying that this is the notification is has to be read down to that extent, and the actual value has to be given as a deduction. And what is the impact would be that actual value can be deducted, and thereby there will be a lot of savings in the GST liability in the hands of builder, which is again a benefit to the customer. And then when these arguments were taken, one of the argument of the department is to justify their stand of one third. They says the moment I say you take actual value as a deduction, everybody will come with a different they'll come with a different or artificial deductions, and they may undervalue the construction cost construction, and they may pay less GST. To that apprehension, Gujarat High Court has rightly told that you have a provision for power to reject that value, and if it is construction cost plus markup is less than the what was offered for taxable value, that can be rejected, and it can be GST can be asked. That cannot be basis to say that actual value cannot be given. So now against this high court decision, because that is high court decision is going to have a lot of impact on the government also, because they are going to lose some revenue here, particularly from the real estate sector. So then what are the options available to the government is this: either they can implement Gujarat High Court decision with necessary amendment to law, or if they are not agreeing with the High Court decision, they may go to Supreme Court, or they make a retrospect amendment. But retrospect amendment may not cure the defect in the law, and it will become arbitrary, and it can be still challenged because it goes against the constitution, because what cannot be taxed directly cannot be taxed indirectly. And one more important point is that government also cannot claim the ignorance, its innocence of land value will become arbitrary and it is not actuals and all, because state government also is party to the GST law, and they also collect GST. They also give notifications. They also give notification saying one third is the land deduction. Same state government will give a notifications for every area saying that this is a area value, market value of the property, and you pay stamp duty on this. When they say that, they cannot claim a innocence, saying that once I give a option of actual values, that will become incorrect, because the same state government cannot take a contrary stand. So that is why this Gujarat High Court decision is going to open for a very good important point. And now if you see that comparison what I've given it here, so because a lot of excess tax being paid to the government, so can we do anything out of this? So of course we can do. What we can do is can go for a refund of whatever the excess tax paid, and of course if it is collected from the customer, you can't get it. Either you have to return to the customer and go for refund, or you can ask the customer to go for refund. That is for the past period. For the future period, what we can do is we can pay it under protest and say that actually I'm liable only for the net of the land deduction of the actual value, but I'm paying it under one third on the protest, and what are the excess paid may be treated as a under protest, and I would like to go for refund in future. That way we can handle, and if at all if either government implement this decision, or else if they make a retrospective amendment in the law, we can use that benefit, and also of course we can get the benefit of that. And further, another issue relating to the practical issues relating to the valuation in real estate is that, suppose in this is more specific and particular in the villa projects. What will happen in villa projects? There will be agreement. Suppose the villa is sold for 2 crores. What generally practice in the industry is that they'll first they'll give a execute a sale deed for the land. There's plot they'll execute and they'll give a sale deed for the land, and they'll reassure that, and whatever the building that was constructed on that plot. So particularly in this type 2 city, this practice is there. What they do is that building permission will be taken in the name of customer or in the name of the some individual, and that building will be constructed, and that will be taken as a contract. In this case, what will happen? So because villa project may the any project, the land component is more, so they can, what they can do is whatever the sale deed executed for the sale of land or plot, there will not be any GST, and whatever the work order or construction agreement given for the building construction, only that will be liable for GST, and we can minimize the GST impact in these cases. So however, the way we write agreements is very important, and it will also be critical when department disputes also. If you execute a AOI saying that I'll sell the land as well as I'll construct, and it is nothing but a split up transaction, so that care has to be taken. And another practical issues relating to the valuation of the real estate transaction and the GST is that there will be a lot of discounts will be given, either season discounts and all. If it is before stay, suppose there will be pre-launch offers or else some festive offers. So at that time you get a discount at the time of booking itself. That time, of course, it is not a problem. You will pay only on the discounted price. Suppose there will be some discount saying that if you pay the total price by this so and so time, I will give a 5%, 7% discount. There also that discounted can be taken as deduction, and balance only we can pay GST on it. And now another important point is sometimes what will happen, because for various reasons the construction may get delayed and handover may get delayed. In that case, general clause would be there in the agreement saying that whatever the delay period is there, they will be paying a compensatory rent for agreed amount. Now the question is, whatever the compensation was paid for the delayed handover, whether it will take a character of discount or not is the question. Of course, we can take and say that net of the this rent adjustment, I will pay GST not on the total amounts. So for to give an example, 1 crore is the total sale price. Out of 1 crore, 90 lakhs was paid by the customer. Only 10 lakhs was left over to be paid. And I actually agreed to hand over by 2022 April, but I could not give it in April 2022 by whatever the reasons. And that I'm handing over suppose in November 2022, because there is a 5 months 7 months delay in the handover. They would have been agreement saying that whatever the equivalent monthly rent to the that particular unit I will be paying, and customer will get that deduction. So whatever 7 months, suppose 20,000 per month it is given, whatever 1.4 lakhs is there, that can be deducted from the value and pay GST only on the next of the amount. So that can be taken even for the special discount also. And this is, so far we have seen the issues relating to the valuation. Now we'll see the further issues related to the cancellation cases. So in some cases there will be cancellation by the booking by the customers. They may book it, and for the various reasons they may cancel it. Now the question comes is that first question is whatever every builder will collect some cancellation charges, some 100 rupees per square feet or 200 rupees or 500 rupees per square feet, something like that they'll collect. So what are the charges is that whether GST is liable on that charges I collect from the towards the cancellation charges. Answer is no. No GST is liable on the cancellation charges. So this is as far as cancellation charges. Now question is, so that is fine. That's okay. Now the question is, suppose there is a booking is happened here in the 2016. I have taken advance of some 20% and I have paid service tax at that time, and another 30% has come in GST regime, and another 40% has come in GST regime. Totally 60% of the value customer has paid, and have paid respect to taxes of service tax and also the GST. Now after paying 60% of concession, customer has come back and told that I don't want your flat and cancelling your booking, my booking. So now what would go to the the fate of the tax, service tax and GST has already paid to the government. For this, as far as service tax is concerned, because cancellation happened now, so whatever the service tax was paid at earlier, that can be claimed as a refund, and you can also refer the section 142 subsection 5 where it says when service was not provided, and that will be refunded and in cash. So whereas GST also, GST again, it all depends on how we disclose in our returns and how we made our complaints. If you have shown it as a sales, that 40% whatever the amount was come, if you show it as a towards the sales, B2C sales in the GSR 1 and also GSR 3B, then there is no, then the ideal position would be that whenever you give invoice, there is a provision under section 34 where this says you have to give a credit note. So credit note is the time limit is there, that has to be given only on before 30th September September of next financial year. Up now, however, now it is been increased to November, but once you give invoice, the adjustment of taxes will be will become a difficult, because you have unless you are within that time limit of September or November. So if it is after that, that suppose, to give an example, suppose booking has come in 2020 and customer has paid the advance and I paid GST on that, and customer has come in 2022 and say that I don't want your flat, I'm canceling my flat booking, and you refund me the whatever the amount so far paid. Now, whatever the GST, if you show it as a B2C sales in the GST returns, then whatever GST paid, you can't adjust it now because the time limit of giving credit note is expired. So, you may have to return to the customer only net of GST. That means GST cannot be refunded, and if at all, customer can go for refund. Whereas in case of if you are shown it as advances only and you are not shown it as sales in the GST returns, then what we can do is we can give a refund voucher to the customer and we can go for refund. Either customer can go for refund or we can go for refund. Whoever is going for refund, they should prove that they have only taken the burden of that tax. So that all depends on how you disclose in the GST returns. And there is also possibility that some customers will ask for a transfer from one unit to another. So when this kind of suppose initially they would booked in the third floor, or they would have booked in west facing, and later they change their mind and they want east facing, or sometimes they want a higher area unit from 2 BHK to 3 BHK, or in 3 BHK like different areas. So likewise, various reasons customers ask for a transfers. So wherever the availability is there, builders will do that transfer. Now the question is, while doing that transfer, builder will collect some charges, saying that transfer charges, some 100 rupees per square feet or 500 rupees per square feet, he'll collect. Now, what are the transfer charges is there? Whether I'm liable for GST is not, or not is the question. If you look at the plain of the transaction, there is no service is given. It's just permission given for the transfer. We can say it is not liable, but it is always safer to collect GST on that and pay to the government. And there is also concept of these investors will be there in the various real estate industry. What they do is they'll give money, pre-launch offers or pre-launch bookings. They pay money total to the customer, to the builder, and they says is that I'll take after 3 years or 5 years with this so and so amount. Suppose they says I give 1 crore in the 2022, and after by 2025, that is within 3 years, you give me the double amount. Likewise, they'll put offers and the investors come and invest. Now the question is, whatever the 1 crore that has come from the customer, builder is going to, builder is sure that is going to be returned to the customer. That means that investor it is going to be returned. Now, how this GST, how GST has to be complied? If you make a record of saying that he is also customer for the booking, and you show it as a customer in the records, in the financials as well as the agreements on booking agreements, then you're gone. You have to pay GST on that whatever the amount you have got it, and whenever you are returning it to the customer, as I have explained in the before point. So just show it as advance from customer. Don't show it as a B2C sales. Whenever you return to the customer, you claim a refund of the GST paid on the initial booking, or else you can adjust for the other output liability. So likewise, the investor you can look at. Say the other also planning possible. Most of the people, some of people what they are doing is what they're doing is though they get a money for the residential project, the moment they show this is booking for the residential unit, if they attach GST, what they're doing, they're showing it as on record, they're showing it as a booking for the some land sale or already completed unit, which is not liable for GST. And after 2-3 years, they again that will be returned. So, or else they are after 2-3 years, they are converting the booking into flat, which is liable for GST. Likewise, also they are doing it. So that is also possible to defer the GST liability, or else to save the GST liability for some point of time. So far we have seen the issues in taxability and valuation, and also the transition and also the cancellation cases and various other scenarios. Now we'll see the practical and legal issues in the input tax credit availment in the real estate. So now first and foremost question is, whatever the 5% scheme has come from 1st April 2019. So is it mandatory or is it optional? That means as a builder, will I have an option to choose 5% or continue to work the 12% with full input credit? That is the question. Answer to this is, whatever the new projects after 1st April 2019, as per the notification, yes, it is mandatory. However, legally it can be questioned. As I was explaining for the land deduction, this also input tax credit cannot be, this composition rates cannot be forced. It is always should be given optional. So likewise, we can also say that input tax rate is the main one of the important criteria, important objective of the GST, and that cannot, and it's also held to be fundamental. Sorry, it is also held to be vested right of the taxpayer. That cannot be denied and say that you have to go for 5% without taking any credit. And another important point for this point is that if you see that conditions of that 5% without input tax credit, there are various conditions. Now the notification did not tell about, if I don't comply with that condition, what will happen. That means they says 5% is the rate, and they says you follow ABCD conditions. The moment I fail any conditions, that 5% is not eligible. Now the question is, if I don't eligible for 5%, then what would be the consequence? Automatically I come into the 12% GST. That is the automatic, but the notification also has not given a clarity. So keeping all this in mind, legality of this composition scheme, and also that we can once someone can take a chance and say that I can still take the full credit and I can pay GST at 12% only. And in fact, we have challenged this matter in Telangana High Court, and the matter was partly heard. And of course, we have to see how this is going to be turned out. As of now, we have challenged in the court. And the similar issue is there also for restaurant industry also. And okay, this is one issue is that now various other scenarios where without dispute you get the input credit. That means without this scheme, suppose if it's a commercial projects, you get the input credit. And also for residential projects also, prior to 1st April 2019, you get the input credit. There the various question that comes is, what are the equipments I use, like lifts, AC chillers or AC missions, DG sets, etc. So we can say that these are plant and machineries, and I'm eligible for the credit. And similarly, furnitures and fixtures, because it's a mobile, there again it is eligible for the credit. Then comes is the very important and interesting issue also. What is this safari case is that, suppose if you take you take an example of there is a commercial complex was constructed, and there are two type of builders. First type of builder is that he will construct that mall, either during the construction or after the construction he will sell it to the customers. In this case, the GST law also very clear. They says that if once you sell before the completion of the construction, you have to pay GST at 12%, and whatever the input credit is that you are eligible to take. There is no restriction on the input credit on the construction expenses. Suppose you take a type 2 builder. The type 2 builder, what they do, what he does is, he don't sell it, he'll construct it and he lease it to the customers. After the completion, he lease it to the customers. You see here, on lease transaction anyway is going to pay GST, because commercial lease is liable for GST at 18%. Now there is a restriction and of the credit of construction expenses under section 17 subsection 5. This is what was challenged in Orissa High Court, saying that this is discriminatory because either I construct and resell it to the customer or construct and lease it, and both the cases output is getting taxed for GST under GST. That being a case, there is no rational or reason to the to deny the credit, and government is getting revenue on the both outputs. So it is it is entirely defeating the GST objective, basic objective of GST. That is being challenged on that grounds. Orissa High Court has, in case of Safari Trades, has agreed and told that yes, it is defeating the very purpose of GST of avoiding cascading effect, and also the leading to discriminatory treatment between the same category of taxpayers as category of persons, and it has read down that restriction. Now that matter was challenged before Supreme Court by the department. We have to see how that is going to be turned up. But if it is going to be very it is going to create a lot of tax savings in the hands of builder if the construction expenses are allowed as an input credit in the case where the building is meant for a lease. So there again, there's another important point is, so to what we can do is to avoid all this dispute. What somebody builder can do is, so either they'll let them bifurcate into construction expenses into civil works and non-civil works. Non-civil works, anyway, we can say that it is not covered by the restriction and we can take credit. Civil works, it goes into this dispute. So this is how we can plan it to minimize the disputes. Then there is also an important point is that what happens at the time of starting of the project, I have actually meant it for the sale. So thereby, once it is meant for a sale, then I can take the credit. Suppose either I have changed my intention of selling it. That means I was told, I felt that I think reselling will not be giving any fetching. I'll retain it and I'll collect the lease charges. Then will that make any difference in the eligibility? Because at the time of availment my intention was to sell only. So but in the mid or the end I changed my mind. So here again, this is again area of ambiguity, where the law is that whatever the at the time of availment, that position has to be seen, not the post ITC cases, post availment cases. This is another area which is going to create another confusion. And another important practical issue that is also there for the ITC reversal for the exempt supplies. So as all of you know, if your output is taxed at full rate, it is taxable. Your input credit, corresponding input credit will be given. Suppose if for any reason it is exempted, the corresponding input credit is restricted. Now question is, one second. Question is, in real estate, what will happen if you take any, suppose you will take a better example for commercial complex, because even it is relevant for after 1st April 2019. Suppose the project of construction was started somewhere in 2018, and I kept on constructing, and every year I am selling some 20% of the area to the customers, and whatever the advances I receive, I am paying GST on it. Now, I have received the completion certificate in the year 2022. Suppose in May 2022. Now, till whatever the bookings happened till May 2022, I have to pay GST going by the whatever the law what we have discussed. So there would not be any exempt supplies during the financial year 18-19, 19-20, 20-21, 21-22. Because I did not make any sales, post-over sales were not there at that time. Post completion certificate sales were there only from the May 2022. So if you look at turnover wise, the exempt supplies turnover was there only from May 2022. Prior to that, that is not there. Now, if you see Rule 42 or Rule 43 formula prior to 1st April 2019, it says that you take input credit in the particular month or particular year, whatever that exempt sale or taxable says, proportionately you make it. They did not give a chance for the actual usage. They simply say that you take your turnover of the exempt supply and taxable supply, proportionate, and proportionate rate you take it. So going by this formula, if you are in 2018-19, so because you don't have any exempt supply turnover, because everything was booked before completion, you pay GST on everything. So thereby you can take full credit. But this lacuna was there, it is getting benefiting to the real estate industry. Why? Because if we take an example of the same example, so exempt supplies are starting only after the 2-3 years, and that turnover base, if you apply, a turnover of exempt supply will only come in the 2022. So going by that logic, whatever input credit availed in 18, 19, 19, 20 or 2021 will not get reversed under Rule 42, and thereby, and by the time completion certificate is come, there will be hardly anything ITC would be available, because by that time cost would have been incurred. So thereby, they are not actually reversing the credit of the completions, post completion sales, and they are getting higher benefit of input credit. This lacuna was noticed by the government. What they have done is, if you make turnover wise reversal for the real estate, they are getting a higher credit, and they are end up reversing less input credit. So what they have told is, from 1st April 2019, so it is not on your turnover, you have to go by your project area, and every year it is not final reversals. Every year is provisional only till its completion of the project. You have to make a reversal. For example, in our case, suppose project is started in 2020, they says is that from 2020 till the completion certificate, you make a provisional availment, and once completion certificate is received, you know how much area is not going to be offered for GST. Because suppose you say out of 1 lakh square feet area project, 80% is already booked, and you are paying GST on that advances. 20% was booked after completion, so you know that you are not going to pay GST on it. So what this rule is says is, after 1st April 2019, 80% you are eligible for the input, and 20% you are not eligible for the input. This reversal has to be made from the beginning of the project till the end of the project. So that is the amendment that has come from 1st April 2019. Before that, that lacuna was there, so people can get benefit out of that lacuna. And of course, there is another issue is that there will be clauses for the retention payments to the contractors. So their question, I think, is that whether that condition of 180 days not paying will come. So the background of this condition is that there is one of the condition is that whatever the input credit you avail, within 180 days from the invoice, you have to pay to the your customer, your vendor. If you don't pay it, you have to reverse that ITC along with interest from the date of availment. So whether in case of retention money or delayed payment, whether this will apply or not, is that for this, wherever agreements in case of retention money, because that there is a pre-agreed term saying that it will be paid after some time. So we can say that there is no failure to pay GST as a value to the vendor, and there is no reversal required for this under this condition, and you can say that ITs need not be reversed. Whereas in case of other than retention money, one may have to reverse it depending on the agreement terms. The agreement terms itself provides that I can pay after 180 days, then there is no problem, there is no reversals required. And another common question is, if I pay advance to the contractor, will I get input credit? Answer is no, because on advances, tax vendor cannot give invoice. Once he gives invoice only, then you can get the input credit. And as I think free gifts I already answered. And there is another question is, suppose there is some partnership form was opened for a particular project, and there is some input was lying after the payment of this output liability for whatever reasons. In or else company is getting closed. Whether the closing balance will be getting refund or not is the question. For this, no refund, because refund of input credit will be there only in two cases, either in case of export or in case of inversion duty. So both of them are not there here, so there will not be any refund. And also as far as motor vehicle purchase, of course, if it is motor vehicle seating capacity more than 13, you get credit, otherwise you will not get credit. And as far as repairs or insurance of the vehicle, prior to 1st February 2019, you are eligible for credit. After 1st February 2019, you are not eligible for credit. So as far as the 80% condition, so if you recollect in the beginning, I told one of the condition for the 5% scheme is that 80% of the purchase has to be made from the registered persons. Then so there are some practical issues, so I would like to highlight. One is that if you look at the condition is that you have to maintain a project wise records, and records has to be maintained, you have to disclose in the GST returns. So here sometimes what happens, there are if the builder is having a 2-3 projects, or else in the same area there may be 2 different projects are going on. Suppose there is one tower 1 is going on now, and tower 2 they would have taken separate permission. As far as RERA as well as GST also, both are different, treated as different projects because the separate permission was taken. So now so for construction, I would have procured cement commonly, or else I would have given a contractor common contract. So I would have expenses incurred commonly. In that case, how would I bifurcate this 80%? So in that case, I think our accounting principles, the general accounting principles will come into picture, and we have to bifurcate based on the actual apportionment, and we have to accordingly we have to comply with this 80% condition. Wherever there is shortfall, to that extent we have to pay. And this 80%, of course, I think I have covered it. The another very commonly questions, or the commonly doubt questions in this area is that, sir, construction, flat construction or villa construction, I okay, sir, to some extent, to major extent, people are ready and they are paying GST and all that. So in case of plotting projects, whether GST is liable or not is still a big question. And if you ask my personal opinion, there is no GST liability on this plotting, and it is because it's nothing but a land sale. It is only that sale of developer land. There is no difference between normal land sale and developer's land sale. It is just only some decorative land. That's all. So similar to that. Buy a food item in the roadside hotel, roadside tiffin shop, and you buy it in some decorative food item from the some big shop. So except that there is no difference. It is just extra decoration was made just because to make a higher price of the land. There's some development activities are taken, so it cannot be said that there is no it is some services there. However, there is luckily there is one advanced ruling also there. They're told that it is not liable by GST. The logic what they have taken is that whatever the development I would do on the plots, for example, the drainage system or the electrical polling or the roads, all those are whatever I develop a property will not go to the customers, will go to the municipality or the company and the local authorities. So what I have done development is not for the customer. There is no development activity. So I have just told same land to the customer. So that is the logic out there. This advanced ruling in case of Shantila real estate has told. However, please note there are contrary advanced rulings in where holding that GST is liable on the plotting. This is also challenged in the latest Gujarat High Court. They are also told that whether I sell a land or the developer land, it will become same, and there is no GST on it. That can also be referred. However, some people are practically what they can do is what they are. This is also causing some problem. Is that what they do? Suppose if I say my land I sell it for 10 lakhs. Out of 10 lakhs, I say that 7 lakhs is the land and 3 lakhs is the development charges, and they'll execute a sale deed only for 7 lakhs, not for 10 lakhs. There the problem. There comes a problem because at 7 lakhs, if you are selling only land sale and 3 lakhs you are not registering that, then you may say it is a development charges. So you are indirectly just giving the admission that you are doing some development activity. So wherever possible, I think better you put it sale deed for total value, and don't show it as separate charges for development. This is one way of avoiding this kind of disputes. Other way, what they can do is whatever the development charges. For example, in my example, 3 lakhs was taken as development charges. What we can do is pay GST on that development charge at 18%. Whatever the expenses incurred, suppose if I buy drainage pipes, or if I buy electrical poles, or if I buy any cement and steel for it, I take input credit, adjust for it. So thereby you can minimize the GST in that cases also. So that is what I told. You see the GST output vis-a-vis IT, how much you are going to lose if you don't say that. You say that you are not liable for GST. So of course that deduction, land deduction will be given. If you are only paying on development charges, will not be there. So far I have completed the presentation on the normal construction. Now while go into the joint development agreements. So hello, yes. So should we take some break here or should I continue? Hello, hello. Okay, fine. Is my screen visible? Hello. Hello. Is my screen visible?
Sir, it's visible, sir.
Okay then. Should I restart then?
No, you can start, sir. Yeah, you can start. Yeah, please.
Yeah, I think 5 minutes I got over. Can start.
Yeah.
Yeah. Okay. Uh, yeah. So far we have discussed the various practical issues or legal issues in the GST liability on the sales made to the customers by the builders or developers. Now we'll see the GST issues, practical issues, and legal issues in the transactions with the landowner, between the landowner and developer, which are popularly done through joint development agreements. The name and nomenclature may vary, but the transaction remains is that where developer and landowner comes to a understanding. Developer develop the take the land from the landowner and develop the property and gives some portion or certain portion of the developer property to the landowner in turn of in lieu of the giving the land for development. And so this is how broadly they will arrange. So in this background, we'll discuss what are the GST issues or liabilities in the hands of developer in this transaction, and also landowner liabilities or transactions, and also what are the changes that has come with effect from 1st April 2019. And there are some transition issues, and there are other practical issues also. So I have just made a chart of how the transaction will be there. In the first transaction, landowner will give a land to the developer, and developer will develop that property to the and give some portion of the developer property to the landowner. This is transaction number one. Transaction number two. So in case of transaction number three, developer whatever the his share of area, he will sell it to the customer. The other portion, that is the agreed the landowner portion, whatever he gets from the developer, he'll sell it to his customer, or he can retain it. That is his choice. So that is how that there are four different transactions that may come in this JD arrangement. And our we so far we have discussed the third and fourth transaction in the previous slides. Now we'll discuss the first and second transaction. What are the applicable legal provisions, and what are the practical issues or disputes that are going on or may come. So this is what the leg of transaction. First leg of transaction is that landowner gives the right to develop the property, and in turn he'll get the developer property from the developer. So there are various constitutional legal issues in this liability of both the transaction, whether first of all there is a service here or not, whether the government has a power to impose GST or not. At this stage I am not getting into that legal issues or legal challenges, but both the transactions are amenable to challenge before the court. I'm limiting my discussion to the going by the notification, what are the liabilities of both the landowners or developer. So if you look at the two legs of transaction, whatever the constructed area been constructed and given to the landowner, the developer has to pay GST under forward charge, and for this he has to take a first sale as a basis for construction, and GST has to be paid. This is the notification says. Similarly, whatever the development rights given by the landowner to the developer has to pay GST and RCM. However, to that extent of sold area, there is exemption. That means unsold area only there is a reverse charge in the hands of developer. This has come after 1st April 2019. Before that, landowner only has to pay reverse GST and forward charge on the developer rights given to the developer. So this is the gist. And as I was saying, the land development rights are the construction services that is that is so held to be in the notification. Whether itself is a supply or not is a big question, which so far it has not been resolved. In service tax, it is service tax judgments are there where they're told that both development rights transaction as well as the construction services said to be both are not liable for service tax, because there is no service in it and it is just exchange of properties, and also that the whatever this service is given to the customer, that it covers the landowner portion also. These are various points I just put it to show that this is issue is amenable. So at this stage, I think it's not required further elaboration. Here again, as I was saying, this is again questionable. And as for the again another, suppose leaving that constitutional practical issues, legal issues are that as far as the liability itself is concerned, we proceed with an assumption that both transactions are liable for GST, and we'll discuss how practically we have to handle this transaction. And foremost and common question that every time comes is, first of all, whatever the liability is there on the JDA agreement, who has to pay GST? Is the common question that will come at every point of time. So for answer this is, GST law has no answer to who has to ultimately pay the tax. Government will ask the supplier of the transaction to pay GST. In case, of course, in some cases they put it under reverse charge. So whatever the notification says, that person is responsible for payment of GST to the government. So whether he is entitled to collect from the landowner, yes, answer is yes. But whether that is put it in the GST law, answer is no. That means government will ask GST demand only from the developer or the supplier of the transaction. They don't demand, they can't legally demand from the recipient of this transaction. It is only the contractual arrangement between the developer and landowner to arrange for the reimbursement of GST. It is only contractual arrangement. GST law has no bearing or has no relevance in the settlement of the reimbursement of GST. Government has power to demand from the supplier of service. In case of JDA, the developer will become a supplier of service for the construction. In case of anyway other transactions are reverse charge. Thereby, it is purely your contractual terms that will decide who has to pay GST and what to whom, and it is all depends on that contractual terms. Now we'll see the first leg of transaction, that is developer develops the property and shares the specific percentage of the area to the landowner. So suppose assuming that is liable now, but what point of time GST has to be paid? So as I was saying, liabilities on the JDA will have all kinds of question. First question is, first of all, is it liable? That is a big question which we have to see how it is going to be developed. But as per the government, it is liable, and they are giving a lot of notifications saying that this is the value, this is the rate, and all. Hello, yeah. So that is the first question. Similarly, there is ambiguity on every aspect of this liability. Not only on the liability itself, existence of liability itself. There is a ambiguity on the when it has to be paid and what value it has to be paid. If at all value and time is there, at what rate it has to be paid, and what about the various other incidental questions, that also is, everything is not very clearly built in the GST law. To some extent, attempt was made in the 2019 to clarify some areas, but still those lacks either clarity or lacks the legality of the provisions itself. So we'll discuss one by one. First point is, at what point of time GST has to be paid on the construction flats given to the landowner? The answer to this is, before 2019, there is no clarity. Some notification of 4 of 2018 is there, but that is also not given clearly as worded at what point of time GST has to be paid. So after 1st April 2019, notification number 6 of 2019 has come, where it clearly says that the GST has to be paid at the time of completion of the project. So that is there. So thereby the GST liability of the landowner share will be at the end of the completion stage. So now at least to this extent, the notification has given some clarity, and this is a big relief to the builders also, because if they ask to pay at the time of agreement, so they are not yet started their sales, so they'll not having that much cash to pay that huge liability, because the land, unlike customer sales, it is not an advance every time. So because landowner share, you have to pay at once. Suppose if you take 100 flats are there, 40 flats you are going to landowner, you have to pay GST on the 40 flats at one point. So if you don't defer it to the completion certificate, they may say that you have to pay in the beginning. 40 flats may you have to pay GST at one point of, and it will become a lot of cash crunch. So to benefit that, to defer that liability itself, the government has come with this notification. Is very welcome notification to at least some extent. However, there is some practical problem in here. However, later it was clarified. The practical problem is, what government has told is that whatever the developer construct and give it to the landowner, it is liable for GST at 5%. And if landowner is also selling to his customers, suppose in this leg, the landowner for transaction where landowner sell this, in my example, 40 flats were received by the landowner from the developer. So if landowner has the option of either selling it and keeping it for his own use. So most likely landowners also keep selling it, and some of them will sell before completion certificate, some of them will sell it after that. That depends on their requirements. We will discuss the scenario of landowner are also selling along with the developer before completion. Now, first question is whether landowner is liable for GST or not. Answer is landowner has to register for GST and has to pay GST on the whatever the amounts received from his customers. Fair enough. Now, anyway, developer is going to pay GST on the flats given to landowner in the first leg of transaction. Then again, why landowner has to pay GST on the customer sales, his customer sales? To answer this, we should understand whatever the developer charges GST to the landowner for entire 40 flats, landowner is entitled to take credit of that GST, and he can utilize for his sales on the customer sales, despite of the fact that he is eligible, he is paying GST at 5%. This is a unique feature for the landowner transaction. Landowner is entitled to take the credit of 5% charged by the developer, and he can utilize for his customer sales. So far, fine, sir. It looks fine. So that what landowner can do is he can collect from the customer. Suppose if one customer has come and he has booked a flat number 1, and he has taken some 10 lakhs advance. So he'll collect GST at 5% on 10 lakhs, and he'll reimburse. He'll reimburse to the developer, and developer will pay to the government. So far looks fine, but the notification which says that the landowner share, the liability has to be paid at the time of completion certificate, then this credit mechanism may not work practically, because suppose you take an example of 40 flats were taken to the landowner. One customer has come and you are paying GST at 5%. If developer don't give a tax invoice till the completion certificate, landowner cannot take credit. So if they don't have credit, he has to pay in cash. So till the completion certificate, he keep on paying in cash only. And once completion certificate has come, landowner is going giving invoice, getting invoice from the developer. Now, what landowner can do with that credit, because after completion he is no more going to pay GST, so that will become useless. So to avoid this practical difficulty, what government has made an amendment in the year 2021 to this notification of 6 of 2019, saying that landowner liability, that is the share of flats given to the landowner, either you can pay at the time of completion certificate, or before that also at any point of time you can pay it, but last date is completion certificate. So thereby this notification, which is a clarificatory nature, what we can make use of it is, wherever landowner booking is selling his flats to his customers or units to his customers, to that extent of proportionate invoice can be taken from the developer, and he can utilize that credit. So thereby with this mechanism, both landowner share liability was being complied and GST has been paid to the government, and also the developer also end up paying GST on the landowner share to that extent. Whatever the completion date, whatever the remaining flats, of course, he has to collect from the landowner and pay to the government. So this is point of taxation or time of supply. Now this is one area. The other area is that, so at least, okay, fine, sir. I understood at what point of time GST has to be paid, how it has to be paid. Now, on what value GST has to be computed? Similar to this in the above also, prior to 1st April 2019, there is no clarity in the notification. There are a lot of interpretations, and it is only in the year 2019, 1st April 2019, they are given another notification saying that for the whatever the landowner share is there, that the value would be the sale nearest to the joint development agreement. That will be taken as a basis. But this is the notification says. But if you see that first sale near to the JDA, it will have a lot of distinguished feature from the whatever the units given to the landowner for various reasons. For example, first difference is that the sale price with the customer will include three components: material, labor, and also the land. Whereas in area given to the landowner, land is already belongs to the same landowner, so I cannot transfer any land. Thereby, there is a very distinct feature with the landowner transaction. Likewise, there are various commercial differences what we can make it. So by virtue of that, we can say that adoption of similar value of the customer is incorrect, and we can say that whatever the construction cost plus 10% is sufficient, and that can be adopted. However, these are disputable, but safer side is first sale value nearest to the JDA is safer side, and the notification also says from 1st April 2019. Prior to that also, that can be adopted. It is safer, but if it is cost plus markup method is giving a lot of savings in tax, there is nothing wrong in attempting it with the consent of the both the parties. However, that is subject to dispute, but it can be defendable. So this is again the problem. These practical issues relating to valuation. So far we have seen, okay, I know that there is a problem with it is liability itself is not there, but I don't want to dispute it. I'm ready to for payment of GST on the landowner share. Okay, I'm also okay to pay GST for collecting from the customers of the landowner. I'm paying it. I'm also to follow that valuation whatever we discussed. Now, at what rate GST has to be paid? Here, whatever the GST rate what we are applying on the customer sale, the same rate can be applied. And whatever the deduction is there, the similar deduction can be taken. So here, so far we have for this slide we have discussed the constructed flats given to the landowner by the developer. Whatever the GST liability we have discussed, at what point of time GST has to be paid, and what value, what is the rate, and how deductions from deductions has to be made. Now we are seeing a second leg of transaction, that is that whatever the rights development rights has come from the landowner to the developer, what is the GST liability, and what how and at what point of time GST has to be paid. So prior to 1st April 2019, it is only the landowner who has to pay GST on the development rights. Here again, similar to the landowner share, it is again involves all questions relating to the existence of liability, rate of tax, valuation, everything can be questioned. Similarly, here also it can be questioned development rights. Leaving all that questions aside, from 1st April before 1st April 2019, it's only landowner has to pay GST on the development rights. After 1st April 2019, that is put it under reverse charge in the hands of builder. That is developer has to pay GST under reverse charge. However, there is some exemption was given to the extent of sold area of the his share, that is developer share, it is exempted. Unsold area of the developer share, it is liable, and GST has to be paid on that 5% of the value. That is the exemption was given. So that has to be paid under reverse charge. That's what we discussed. Now we'll see the various practical scenarios. Now we'll see a scenario where there was a joint development agreement was entered, and also supplement agreement. Supplement agreement means in generally what will happen, developer and builder, landowner, they'll enter a joint development agreement, and they'll agree for some percentage of the share. They say 50-60% is landowner, 60-40% is developer, or vice versa, something like that. They don't bifurcate the units because they are not sure about how much permission will be accepted by the local authority or government. So what they do is they'll agree for a percentage, and they say that once the approval is received, plan approval is received, they'll identify the units and they'll bifurcate between the developer and the landowner. That is what they do it in a supplementary agreement. So now the original joint development agreement and also the bifurcation of the units agreement, that is supplementary agreement, both of them are entered after 1st April 2019. Now in this scenario, what is the GST liability in the hands of developer as well as the landowner? We'll see in this example. Suppose there are 100 flats, 60% is the developer share, 40 flats is the landowner share, and out of 60 flats of developer share, 50 flats are sold before completion, 10 flats are sold post completion. So in this case, as far as the flats, 50 flats sold by the developer, GST has to be paid at 5%, and of course, if it is affordable, it is 1%. No ITs will be there. So GST valuation would be that whenever you get advance, and that advance value, you pay GST. Whatever the 10 flats which are sold booked after completion certificate, there is no GST because you are not taking any ITs and no reversals. Now, what else is the liability in the hands of builder is that whatever the 40 flats that are handed over to the landowner, you have to pay GST at 5% on the 40 flats given to the landowner. So as I was mentioned in the previous slides, you can adopt a mechanism where based on the proportionate sales of the landowner, you can adopt. But at the end of the completion certificate, you have to pay, and the total 40 flats, GST has to be paid, adopting the whatever the value what we discussed in the previous slides. And the reverse charge liability would be there to that extent of 10 flats which are unbooked in the hands of the developer. There will be reverse charge on the development rights, and the values are also more or less same. So in the hands of landowner, this is what the responsibility in this scenario. Whatever the 40 flats he has received from the developer, he can take ITC whatever charged by the developer, and he can utilize for his customers to that extent of area flats sold before completion certificate. He can take credit. Whatever is sold after completion certificate, he has to reverse the IT. Suppose out of 40 flats, 30 flats were sold before OC, 10 flats were sold after OC. So 3/4 of the credit he can take, 1/4 he has to reverse it. And that 40 flats what is sold to customer before OC, he can collect and pay GST. So far we have seen the scenario 1. Now we'll see the scenario 2. That means it is a bit opposite. That means both joint development agreement and also supplement agreement are entered prior to 1st April 2019. So if you see this here is again the number of flats and the saleable sold area is same. Only that both agreements are prior to 1st April 2019. So here the responsibility will be different. How it will be different, we'll see. As far as the customer liabilities, the sales to customers by the developer, the liabilities remain same. Only this thing is that whatever the sales prior to 1st April 2019, there will be 12%. If it is migrated to new scheme, it will be 5%. Otherwise, the same will be there. The difference between first scenario and second scenario is that as far as customer sales, the rate will be different, because if the bookings prior to 1st April 2019 will be attracting different rate. After 1st April 2019, if it is migrated to 5%, the rate will change. Otherwise, the old rate can be continued once that option is exercised. So as far as the unsold area, same. So there is no GST either before 1st April 2019, after 1st April 2019. Now the main change happens in this scenario is that 40 flats whatever handed out to the landowner, here because the agreement, both agreements are happened prior to 1st April 2019. So because as I was mentioning, prior to 1st April 2019, there is no clarity about at what point of time GST is liable and what value GST is liable. Keeping that ambiguity aside, suppose it is liable, assume it is liable at the time of allocation agreement, that is supplementary agreement, then the GST may have to be paid at 12% on the first sale value. That 5% scheme may not apply because supplementary allocation happened prior to 1st April 2019, and we may have to take the first sale value. However, both the timing of liability as well as the valuation can be contested. Can we say that there is no GST liability at all? That can be kept as a in mind. And Here, there is no reverse charge liability in the hands of developer because both agreements are entered prior to 1st April 2019. So for this, the landowner, it is only landowner has to pay GST. If at all landowner has paid GST and has given an invoice, the developer can take input credit and he can use it for his sales, like similar to what was there. So in this scenario 2, the landowner responsibilities are like this. So whatever sales flats he has received from the developer, he can take full credit. And if he is continuing under 12%, there is no reversals. If it is not continuing under 12%, he has opted to 5%. He has to reverse it. And whatever the development rights given for the 60 flats, he has to pay GST in under forward charge, and he can collect from the customer, developer, if agreement permits it. And whatever the sales he has made, of course, he has to pay GST after collecting GST at what is the applicable rate, 12% or 5%. This is scenario 2. Now we will see the scenario 3. In scenario 3, JDA was 1st April 2019. However, allocation was happened after 1st April 2019. So this is mix of 1 and 2. That means joint development agreement was before 1st April 2019 and supplementary was after 1st April 2019. Rest allocation and sales is same. Here again, the responsibility may change because as far as customer sales, not going to any major change. It is only the responsibility of GST on the landowner share is going to change because the joint development agreements are happened already prior to 1st April 2019, but allocation, that is supplementary allocation, where the right to sale a particular unit will come only at the time of allocation of the agreement, not at the time of JDA. So thereby one can say that it is only the supplementary agreement that is the basis for the transfer of consideration or transfer of development rights. Thereby GST is liable only at the time of supplementary agreement, which is after 1st April 2019. So if the developer is under a 5% scheme from after 1st April 2019, he can say that 5% I can avail and I can defer the liability till the completion certificate. So however, department may claim before 1st April 2019 that clarity was not there. They can say that it is joint development agreement, but leaving that dispute aside, but we can say that 5% is available on the landowner share and I pay at the time of completion certificate only. And whatever development rights also same argument can be taken. So that it is only landowner has to pay GST because by the time right to develop the property was already given by the time of JDA. Supplement is only allocation of the units. So thereby I can say that we can say that the development rights was allocated by virtue of JDA, which is prior to 1st April 2019. So thereby it is only landowner who has to pay GST on the development rights, not the developer. So we can say that. Thereby we can avoid reverse charge in the hands of developer. So this is another bit tricky combination. Joint development was before GST, but allocation was after GST. So here there is again similar to the various scenarios what you have discussed. We can take a one view that because the joint development was prior to GST, there is no GST at all. Only service tax may be there, and by this time anyway now it is time barred if department do not raise any demand, because service tax almost now it is only last 3 months they have time, otherwise they have lost the time. So 5 years also got over. The other view is that GST is liable and it is liable at the time of completion certificate. There are some advance rulings. Of course, if GST advance ruling, it will be in favor of GST department. But I may not agree. My personal view is that the first one is quite defendable and it is also saves the liability because we take a stand that service tax is liable, and by the time now anyway they are time barred, they cannot demand service tax. Is another scenario is there in the joint development. So far we have discussed the area sharing model, that is joint development agreement. Suppose there are some arrangements where they will not share the area, they will share the revenue. So instead of they say that 40% area is yours, they says 40% of whatever the collections I get, developer get, landowner will get the share. So in this case, how that liability is going to change? Here we can say that reverse charge liability or the landowner share liability may not be there. We can say one option is that whatever the total revenue collected by the builder, he will pay GST and say that there is no GST liability on the landowner share because it's only revenue sharing. and total ADA revenue sharing is anyway getting taxed. Or else another option is that what they can do is they can route that entire revenue through one escrow account, and their respective share of the landowner and developer, they can pay GST on that, and so thereby the obligation is discharged. So as I was saying, there are very basic issues of the liability itself, either constitutionally or legally, or valuation, or time of supply, or also the various nuances of the liability. There are various judgments in the past wherever they're told when the provisions are not clear, so the levy itself is not valid. Right from the B. Srinivasa Setty case of income tax, where they were told in the contest of capital gains for the capital gains, and Govind Saran, Ganga Saran also, they told whenever there is the provisions are very vague or unclear about the levy itself, that can be the levy itself is not there, so they can struck down the levy. So likewise, various arguments are there to say that the JDA liability, there is no liability of GST either on the landowner share or the development rights. I think that second point I have covered. Yeah. So with this, I end my presentation on the various practical issues and challenges being faced by the real estate industry in the GST regime. Hope I'm clear. Now we can take up the questions. Yes, questions are there.
Yeah, we have a lot of questions, sir. I will share my screen. We'll take it one by one, sir. And if at all that is already covered, we can skip that question, sir. Okay.
Yeah,
just share
okay.
I'm just sharing my Excel sheet. So is my screen visible, sir?
Yes, yes, it is visible.
So you can take it up from one by one.
Yeah. A developer purchases steel cement for his project. Concrete mixer project was in April 2021. His project is completed in May 2022. He is under 5% scheme. Now he wants to sell the leftover steel as well as the concrete mixer. So he raises invoice and corrects output. Can he claim GST paid on this when he has purchased an input tax credit? If yes, how to show it in Form GST 3B? So he's basically saying that whatever the his question is that whatever the leftover or unused steel as well as the used machinery of the concrete mixer, whatever he is going to pay GST, whatever on the sale value, that is clear. Now whether whatever the purchase input is there, whether he can get the credit. As far as the unused steel, it may be it is easy to say that because that steel was not used for the construction or real estate, so thereby that 5% restriction will not come into picture, and I can take the credit. Only the problem is that time limit is the problem, because if of course April 2021, I think you have time, but if it is suppose it is April 2020, there is a time limit problem. Otherwise the steel purchase credit to that extent of unsold unused steel, you can take the credit, there is no problem. Only time limit you have to look at it. Wherever you have this kind of expectation that you are going to sell it in the future, some portion we can take credit and keep it as a saying that it is for resale. As far as the machinery sales, that used machinery sales, this is again there is a rule 43 where it's because concrete mixer, if you are capitalized, if it is not capitalized, then same steel story will come, but because it is used partly for construction, we may have to reverse it proportionately. If the concrete mixer is capitalized in the books of account, it is sold after capitalization, then rule 43 will come, and there proportionately 5% per quarter is there. That mechanism may have to be followed. Hope I am clear. I think that second question I think I have answered. The time limit issue will be there. Yeah. Revenue recognition of the builder will be on the basis of percentage of completion method. GST will be raised on the basis of time of supply. So there will be difference to this books of account. How to explain this to department? Sir, this is a basic thing, sir. This has been there in the, not only in GST, it is there in the service tax, it is there in the VAT. VAT also it is there. So thereby we only have to explain give the reconciliation. The reconciliation can be from the our whatever the current liabilities, where we will disclose the customer advances as the liabilities, plus or minus opening debtors and closing debtor creditors, minus whatever that sales are there. That reconciliation we have to give and give it to the department. So that reconciliation we have to give it and explain, sir. There is no other way out to say that this is the to say that they are that is the default we have to give, sir. Put it otherwise. Yeah. Next question is company into plotting of land. That is, they'll buy a land and plot the same. Will there be any GST on sale of sale as land is involved? Also, then GST will be on the total amount received. I think I have already covered in my presentation. We can say that GST is not there. No, it's not at all liable on the plotting. However, if the parties, if the client is not ready to dispute it, and if they want to have a dispute-free method, what they can do is they can bifurcate the development charges in the plotting, and they can pay GST on the plotting value, and they can take the credit of the expenses incurred for that plotting development. Then is PMAY letter from bank sufficient for concession on affordable housing? Yes, sir. This is answer is yes. Prior to 1st April 2019, that means instead of 12%, there is 8% rate between the 2018 and 2019. That is, I think, 25th April to 25th January 2018 to 31st March 2019. Yes, that letter is fine. However, after 1st April 2019, if it is a new project, or else if it is a new project, then that letter has no relevance. Only condition is that the area should be less than 60 square meters in metro, and sale consideration is 45 lakhs. If it is non-metro, it is 90 square meters or 45 lakhs sale and 45 lakhs. That letter from bank is not relevant to decide affordable housing after 1st April 2019 for the new projects which are started on or after 1st April 2019. For old projects, answer is yes. GST was paid at 1% for the residential unit, and after obtaining completion certificate, he has changed his mind and cancelled the unit. What is the position of GST paid? Whether it has to be reversed now? Now the position of the unit is unsold. Answer is yes, sir. We can, if it is as I was mentioning in my presentation, if the it was shown it as the advances, and then we can give a refund voucher to the customer, and whatever GST is paid, either we can adjust for the other output liability, or else we can go for refund, or else customer also can go for refund. If it is shown it as a B2C sales, there is some technical challenge, because that if the time limit to credit note is not expired, yes, we can give a credit note and you can go for adjustment or refund. If it is credit note time limit is expired, I think there is some difficulty. That's the reason better show it as a advances from the customers. Next question: if real estate company indulge in a business of sale of flats, that is individual units, and sell an incomplete project to other builder as is basis, what will be the GST applicability on such sale? There is no GST liability, sir. It is a business transfer. So thereby we can say that there is no business transfer is not liable for GST. We can take argument that point is there, and there is specific exempt entry also there in the GST, where it says if the business is transferred on an ongoing going concern basis, there is no GST. That exempt entry we can take. In any case, we can say there is no. It is only sale of the building as is basis, and there is no contract for service or contract for supply of any goods. We can say that, and there is no GST liability in any case. Then, yeah, please explain Rule 42 after 1st April 2019. I think I have already explained. If time permits, again,
No problem. If it is it's already covered, the recording will be provided to the participants. They will be rewatching it again, sir, because these are the questions that came up at the start before. Maybe that might have covered. Okay. So no
okay,
problem.
then fine. I'm skipping this question, answering this question. If still participant like to explain again, re-explain, I would do it subject to time availability. Or else time is not there. You can
maybe after taking up all the questions, if time permits, we'll come back.
Yeah. If suppose time does not permit, they can send me a mail. I'll explain.
Yes, fine.
Then what is the rate applicable for construction of individual house? What is the rate applicable for plan and drawings of highways departments. So as far as individual house, sir, if the contract is only for the house construction and that is not as part of the gated community, that residential project, that is single residential unit, it is the contract is for a pure labor, then it is exempted. That means I have taken a contract from some individual person, and I told that I'll come with my labor and construct a building for you. Then there is no GST on it. It is exempted because it is individual unit and it is only pure labor services. Suppose it is still individual unit, but I have given a contract to the contractor saying that you take all materials per square feet. I'll give this much is the price. In that case, it is liable for GST. The rate would be 18%. If it is a affordable housing, it is 12%. So as far as the plan and drawings to highway department is 18% is GST because it is a design engineering services, architecture engineering services. It is 18%. So 1 year maintenance collected by builders. Next question, I'm going to next question. What 1 year maintenance collected by the builders? What is the rate of tax can avail input tax rate? Yes, we can. Rate of tax would be 18%. We can avail the credit on the whatever the expenses incurred for the maintenance. Suppose you appoint some security person, some security company will charge GST on it. Similarly, you buy some wash cleaning items. So all that rate can be taken. GST rate is 18%. I sir, in case of JDA agreement between landowner and 3 builders, each builder has their share of flat. How GST becomes? I think I've answered this question. Next, I'm skipping it. If person booked a residential property in residential project before completion, he sells that property to a third party. He is required to charge GST. Is required to check GST registration. So I think the answer was like this. Question was like this. So there is a customer X. He has booked a flat from the with the builder. And what after 1 or 2 years, what he is doing is he is reselling it to somebody. So in this background, suppose I book a flat for your apartment for 1 crore. After 2 years, I see that for whatever reasons I put it for resale, and I am reselling it for 1.5 crore. Now his question is whether the customer who is reselling the flat for 1.5 crore will he liable for GST? If at all liable for if he liable for GST, he has to take registration, of course. But answer would be that there is no GST liability because the customer, whatever the agreement with the new customer, the old customer will simply says that this is under constructed property and you take it and I'm transferring it. So there is no contract for service again by the old customer to new customer. We can say that there is no GST liability in the hands of old customer. So you can say to put it shortly, no GST liability in the hands of old customer. If 4 units are being constructing and 1 unit is selling before completion of property, is GST chargeable though he is not a regular builder. So sir, irrespective of the number of units, once the constructed is doing construction and it is construction covers both material and labor, is liable for GST, and 20 lakhs is exceeding in a particular year, he is liable for GST registration and he has to pay GST. If 60% consideration received before completion certificate, 40% after completion certificate, whether GST has to be paid on 40% also. Answer is yes, sir. 40% also he has to pay because as per that schedule to entry, once you get any consideration before completion certificate, entire consideration will be liable for GST. However, we can, as I was mentioning in my presentation, if till the customer comes in, whatever the percentage work done, that we can say that that is not liable for GST because it is a self-service. That can be taken as a reduction, but in this case, whatever the advances that has come after completion also liable for GST because there is agreement before completion certificate. Then if the landowner is in JDA remit to GST, will he required to obtain GST registration? If yes, then once project is complete, how can he cancel his registration number? So yes, sir, if he is he has to take a registration because he has to pay GST on his customer sales. If he is not selling his share, he is just retaining it, either he is leasing it or he is keeping it as is, then there is no registration requirement because there is no GST liability other than the customer sales. Otherwise, he has to take registration and he has to pay GST on the customer sales. And once that project is over, is as good as closing a business, and you can cancel his registration by filing all updated returns and clearing all liabilities, and you can apply for cancellation in the GST portal, and you can get it cancelled. In respect of JV for development of land, the GST applicability on the landowner. I think he meant for JD, so I think I already answered in my presentation. For delay in delivery, it can be treated as a deficiency of service and issue credit note. Yes, can be done. JDA is halfway through. If JDA itself is cancelled, what are the implications of both the parties? If it is JDA is not, it's not materialized and finally construction has not happened, there is no liability at all. It is as good as entering agreement, but end of the day, you have not given a service. So there is no GST liability. If at all anything was paid, they can ask for a refund. Please clarify accounting of GST as cancelled after 3 years of booking. So GST, whatever GST and service tax was paid, we can ask for a refund, sir. I think I've got it in the presentation. Is there any notification or FAQ that cancellations are not liable for GST? Sir, as per the government department, it is liable for GST, sir. Cancellation charges, they says you are tolerated the act of or the tolerated act of cancellation, they say it is liable for GST. And they made some demands in the service tax regime, but there are judgments also saying that not only in the real estate, in the hotel bookings also there was judgment saying that cancellation activity is not liable for GST service tax, which is equally applicable for GST also. But as such, there is no notification FAQ because they say that it is liable. And ITC reversals under Rule 42, what is only for projects under 12% or commercial, or will apply to ongoing residential project. It is applicable for both, sir, commercial as well as the ongoing residential project where you are paying under 12%. It is explained that if 80% of the project is completed, then GST on 20% of the project has to be paid. It is applicable for ongoing or for only new project. So this 80%, 20% is with respect of the new scheme or old scheme. It is there for old or new scheme. The benefit would be that in the new scheme, because anyway you are not taking credit, so you are not going to lose anything. If it is old scheme, because you are taking credit, if you are not paying an 80% of the work, 80% of input credit you may have to reverse. So that benefit you might going to lose it. For new scheme, that benefit you are not going to anywhere, you will not lose. So this theory is equally applicable for the old scheme and new scheme. Only advantage under new scheme is that you are in a better position. So next, is necessary to comply 80% purchase from registered in case of delay opt for 12%? Answer is no, sir. If it is opt for 12% for ongoing projects, 80% condition is not there. Can a dealer collect GST from the customers in case of 1%? Yes, answer is yes. He can collect from the customers. If it is 1% or 5% is not it is not debarred to collect. He can collect. Then GST is payable on the unsold flats on RCM basis by developer after obtaining completion certificate at 5%. Answer is yes. To that extent of unsold, he has to pay under RCM. When value of construction service is computed as equivalent to first sale value nearest to GDA, when value could be precisely ascertained by valuer, should we take the first sale value? Please explain. Yeah, I think I have covered it. When you are able to explain the by valuers, that can be taken, and this first sale value can be ignored. However, department may dispute it. If you are ready for dispute, you can take that stand. It is quite defendable from the law perspective. Then under JDA, as GST is chargeable on the value of first sale near to the JDA date. Under JDA, okay. Then whether sale should be the agreement of sale or sale deed should be also be completed. Need not be, sir. Whatever the price agreed, that can be basis. That need not be in the sale deed. Agreement of sale also will be sufficient. Can ITC be taken by first contract, civil contractor of the commercial building? Yes. Answer is yes. Of course, there is a restriction. If commercial building is meant for a lease, not for resale, there is a restriction. That restriction is being challenged in the High Court, which was High Court has given in favorable to the taxpayer. Now matter is in Supreme Court. Keeping that dispute aside, if commercial building is meant for resale, yes, you can take it without dispute. If it is meant for a lease, not for resale, it is disputable. And what they can do is they can bifurcate civil works and non-civil works. They can take non-civil works without dispute. Civil works, it may be disputable. Then next question, whether GST is applicable on the development of layouts. I think plotting I have already answered. PMAY, Pradhan Mantri Awas Yojana letter from bank sufficient for concession on even if it exceeds the permissible value. And before 1st April 2019, sir, irrespective of the area and permissible value, whatever the projects prior to 1st April 2019, the letter from the banker would be sufficient to claim the concession rate of 8%. After 1st April 2019, if it is ongoing projects, yes, that letter will have equal importance, and you can say that 1% is applicable based on that letter. It is only for ongoing projects on or after 1st April 2019. For new projects which are started after 1st April 2019, this letter will not help. Only the conditions of value and area has to be seen. Then under JDA, what is the relevant time of taxation? I think I answered. Come down. How to pay tax under protest in GST mechanism, because GST can be paid on 2S, 3B, and what we can do is either in if you are paying in DRC03, you can write it in that DRC03 itself remarks. If you are paying in GST 3B, after filing 3B and either DRC03 or 3B, we can write a letter to the department, that divisional officer, saying that this is what we have paid under protest. Please treat it as a protest payment, and we can launch that protest by way of writing a letter. In DRC03, you can put it in the remarks itself. Please elaborate GST liability and the worst contract agreement on GST, on which value GST is to be paid. I think worst contract, if it is normal rate is 18%, sir. If it is affordable housing worst contract, it is 12%. Construction qualifies for continuous supply of service. Yes. In GST 3B, whether the amounts received from customer to be reported in B2C supplies or the fax notice, it cannot be called as advance, as construction work is going on, and amounts from customers shall generally be received on completion of certain percentage of completion of the loan landlord. Okay. So I think second part will come later, but as for the first part, yes sir, answer as per the law, once it is a continuous supply of services, based on the milestones of the agreement, you have to generate a tax invoice under GST. However, if the amount has come before that milestone, we can say it is advance only, we can report in the returns. So that can be done. Technically, whenever that advances are converted into tax invoice, we have to show that adjustment of invoices with the invoice advance against the tax invoices. B2C invoices has to be seen. Whether the second part of the question, whether landowner share is liable to GST irrespective of the relevance of completion certificate. Answer is yes, sir. Then, if construction company is providing construction service to retail customers, that is individual homeowner, building is duplex home, is charging 50 lakhs per construction. It has both material and service part. How much GST is applicable on that contract? Whether we can make it 5% GST with no input option. Does anything change if you're providing construction for apartment? So, sir, if it is individual home buyer and it is not a it is complex and all, it's only duplex home. If it is materials are also involved, both material and service is there, the GST rate is 18%, and if it is pure labor service, it is exempted. As far as second part of question, 5% rate will not be applicable, sir, because the 5% rate is applicable only for the apartments or the project complex, not for the individual houses. Hope I'm clear.
Yes, sir. Yes, sir. We have completed all the questions. Thank you so much for covering all the questions in run of time. And if time permits, we have time. If at all you're there is something that you have left here, right? If possible, we can take up that. Not
42 mechanism, is it? Yeah.
Yes.
So as far as Rule 42 mechanism, to put it simply, before 1st April 2019, ITC reversal on the Rule 42 can be made on the turnover. Suppose if you have a post-overseas sales, post-completion sales, only from that month only you are liable for Rule 42 reversal. Till that time you are entitled to take full ITC. You're not liable for reversals under Rule 42. Whereas after 1st April 2019, you have to follow the Rule 42 based on the percentage of area which was sold before OC, which was sold after OC. So that rationally itself is different before 1st April 2019 and after 1st April 2019.
So the last two questions.
Developer plot sale executed by 4 landowners, and after sale deed executed, concession agreement executed by one of the landowner who is builder profile. Is there any separate value bifurcated as land value and construction value? I think it's not clear. Developer plot sale executed by 4 landowners, after sale deed executed, construction agreement. I think that somehow I'm not able to clear.
Okay, sir. I'll share this question on mail so you can respond it.
In which GST liability will come this case we can charge. Okay, and fine. To put it simply, wherever land value is bifurcated in the agreement with the customer, that can be taken as a bifurcated land value, and that can be taken as a deduction. GST will be liable only on the construction value, not on the land value. So that to that extent I can answer. And I think first line is a bit confusing. As far as the rate of tax, either if you're taking construction value alone, you're not taking land deduction, land value, then you have to adopt the 7.5% or the 1.5% of the rate, because 5% or 1% after 1/3 land deduction. So because you are not taking land itself in the taxable value, there is no question of 1/3 land deduction. You are only paying on construction value. So 7.5% or 1.5% will be the rate. Then valuation of TDR in case of commercial projects. So here the notification says it is the nearest to the development agreement. That will be the completion certificate. That will be the value, sir. So thereby they say, so whatever the nearest to the completion, that that area we have to consider. Suppose so there is some 40,000 square feet was the area TDR given to the developer. Per square feet value, whatever the nearest to the completion certificate, that is the basis for the TDR liability. Open, clear. Any more?
Yes,
any
sir.
further?
Those were the questions, sir. And sir, am I audible?
Okay then. Yeah, you are audible.
The last one. This one came up now, sir. If possible, answer, or else I'll share it to our mails.
Fine, I can answer this one. Builder, anyway, we have time 15 minutes, no? We can answer. Builder
Yes,
received
okay.
advance but does not enter agreement of sale. He does agreement of sale after 50% project completion. Can he pay GST only on 50% of sale value? Builder receive advance to customer but does not enter agreement of sale. He does agreement of sale after 50% project completion. No, sir, because the fact that you receive advance, that is there is already oral arrangement. This concessional, I think, applying that principles of Indian Contract Act. The fact that you have taken advance, unless you showed that it was taken as only for some loan or some business loan or some kind of deposit, or it is not taken for this construct flat, but it was taken for some plot or some constructed building. Unless you were able to show that, then in absence of agreement of sale also, because the fact that you have taken advance, there is the agreement orally at least to say that there is the arrangement for agreement for construction of the construction, and GST have to be paid. So to avoid this, to minimize this tax, what they can do is in the initial time they can show this as a advance. If at all the builder has some other properties, either the open plots or the completed units of the building, then anyway either in the open plots or the completed building there is no GST. He can show that as a booking towards that, and after some point of time he can convert that into this, taking some correspondence from the customer saying that I don't want the plot, please give me, I would like to book a flat in this residential project. So like that you can take, and only that point that liability will be there. That way we can minimize. But in absence of this planning, if it is only standalone construction, I think in absence of agreement of sale also GST would be liable. Sir, as far as the development rights value, sir, there is no clarity prior to 1st April 2019. At least after 1st April 2019, notification has given some value, but before that there is no specific notification. So we can adopt different mechanism to, and every mechanism is defendable. First is that whatever the valuation that has come from after 1st April 2019, same mechanism can be adopted. That is value nearest to the completion certificate. Second mechanism would be that the landowner, what is giving development rights, nothing but the construction cost plus markup, that can be taken, or the market value of land can be taken. All the methods are equally defendable, justifiable. in absence of the specific valuation mechanism, we can all these methods are defendable, sir. Whether 80% expenditure from GST covers non-GST exempt supply? No, sir. Answer is no. Difference between worst contract 18% and builder profile. I think the worst contract 18% is like this. Suppose I'm a builder. I am starting a project and I have started 100 flats construction and I started selling to the customer. So instead of me sitting and buying all cement, steel and putting labor contract and all, what I have done is I have given a subcontract to one contractor saying that you construct this flats and I'll give a per square feet. This is the price I'll give. Suppose I give a per square feet 1,500. I'll give a contract and you construct and give it to me. So this is similar to that. That is worst contract and liable for 80%. If it is affordable, it is 12%. Whereas in builder, he will agreement with the customer saying that I'll construct the flats as well as I'll give a land to the you, and this is the builder case. If value of next question, if value of land is not includable in agreement, and that is agreement is only for construction service, still reduced rate of apply after 1st April 2019. Yes, sir, but it is date will vary from 7.5%. From 5% it will become 7%. So in case of combination of commercial complex more than 15%, GST rate is for 12%. Yes, residential apartment, can we claim ITC on the entire billing? Answer is no, because you are liable for GST at 12% only on the commercial portion. The residential portion is still liable for 5%, and you are eligible to get credit only to the extent of commercial portion. If you opt for 12%, is necessary for buy from registered person to comply 80% purchase from registered. If you are under 12%, the 80% condition is not there, sir.
We have took up all the questions, sir. Thank you. Sir, over to you, sir, for thanks.
Yeah, I thank SIRC for giving me this opportunity. Chairman Masandra sir, as well as sir, for this opportunity, and also I thank all the participants for their active listening. The way you raise your question gives me confidence that you very attentive to my presentation, and hope you got benefit out of this my presentation. Any further questions? So of course I given my mail ID in my presentation. You can write it to it. Whatever the little time by permits, I'll try to answer. Thank you.
Sure, sir.
Thank you. Thank you, Venkata Prasad garu. Thank you very much, sir.
Thank you, sir.
I thank the Venkata Prasad garu for giving excellent presentation and patiently answered all the queries raised by the members. There are around, I hope, 42 queries raised by the members, sir. You answered all the queries and given a detailed, elaborative explanation on GST issues, sir. Thank you very much. Thank you each and everyone who participated in the program virtually, sir. Thank you very much. Thank you, one and all.
Yeah. So I have to make a special thanks to Subbarao garu for I feel very happy by when my Subbarao garu has given my introduction, and he is from our native place and a senior member. So thank you, sir.
Thank you.
Yes, sir. Sir, just one request. So can we share the presentation with the participants as a PDF file so that they can read?
Yeah, you can share.
Yeah, we will share it to all registered participants or mail. Those who are watching it online will be sharing it to registered participants. Thank you, sir. Thank you.
Yeah. Thank you.